I ask that you recall Liberation Day, the day that President Trump announced tariffs.
Well,
That you recall that.
we got good old nonsense drama talking going on. There's Scott Besson testifying. Who cares? It's a bunch of crap. It's the same thing every time. These congressmen and women, they go in there and they read scripts from the industry. You know, they're basically funding groups. And they go in there and they read scripts based on the funding groups that donate money to them. And it's a stupid clown show. I can't stand it. Call me jaded, but I think it's a waste of time, honestly. In the meantime, this morning in the Alpha report, we talked about the AMD, and we also touched on. Somebody says there was a little oopsie doopsie on the YouTube post. Okay, hold on. Let me just make sure here. I want to break down what the vision is for today. Give me a second here.
DJT. That was his announcement on Truth Social. Uh-oh. And in so doing, Truth Social.
No, okay, yeah, we're live on YouTube. Okay, yeah. Well, one person's like, "Oh, you're not live on YouTube." Oh, I should be live on YouTube. All right. Anyway, we're good. All is good. Okay, so yeah, I mean, here's the play-by-play this morning, and I give this to you because I recognize not everybody is a member of the Alpha membership that you can get over at meetkevin.com, but I want to give it to you just so you can kind of see what things I'm looking for. And it's after the fact now for those of you not in it, but I always think, hey, if I can provide value and try to teach, why not? So my thesis this morning was the tell of the direction of the market today would be almost entirely dependent, not on the momentum that we're seeing at end phase, which is good. That's great momentum for end phase. It has its own ups and downs. But instead, what would happen at open on AMD? And unfortunately, AMD was down 9% at open. It is now down 15.6%. And to me, the indicator to watch at open this morning was if AMD goes down, that means institutions are not buying the dip. If anything, they're selling. And it is really bad for the entire stack. It's a bad omen, and it means the Qs are going down. We were at 617 this morning. We're almost line to line from pre-market 617, now almost down to 607. In addition to that, you're seeing the software sell-off deepen with an 11.3% decline on Palantir, which that then also reported this morning that you had this risk of a reversal in SanDisk. Just because this whole stack is going, right? And really the way to look at the stack is memory is, and I'm not trying to bag on memory. These companies are making money hand over fist. But memory is one of the last components of the artificial intelligence cycle. And unfortunately, that means there's probably a bad omen coming for memory over the next, few weeks to months. And so I've been advocating for trailing stops on memory. That's not to be bearish on the underlying industries, and certainly we're seeing a broad sell-off, not just in SanDisk today, but also this continuation of a sell-off in software stocks. Look at, for example, ServiceNow is actually only down about 0.5%. It looks like it recovered a little bit from the pain this morning. Got all the way down to about 104. It actually recovered about 4% there. Somebody went in and bought the dip. Let's go look at Salesforce. Salesforce also, look at that. And this morning you had a continuation of the software sell-off. You had a little bit of a recovery here. Let's get into it as well in here. Yeah, look at that. Very interesting. Right around 10 o'clock, so about 30 minutes after the open, a little bit of a reversal on software with the exception of Palantir. But really the play today was watching AMD and then projecting the Q's direction after AMD. We're now right at 607, which is not ideal. We are really seeing the weight of the artificial intelligence and private credit squeeze spilling over to a lot of different names. You're not only seeing it spill over this sort of private credit liquidity crunch. But as a result of that, you're seeing less liquidity available for crypto, which is then hitting companies like Robinhood. And because Robinhood's going down, now SoFi seems to be going down. It's a little bit messy. Now, something we mentioned as well regularly, and we talk about this, is that when you have a broader stock market sell down, you risk company executives saying, well, I guess that means we need to conduct layoffs. So that's not ideal. SpaceX really needs to hurry up an IPO. And who knows, maybe we'll be through this drama by the time SpaceX IPOs. But I mean, look at this. I mean, Robinhood is coming up on a 50% decline in value. Nvidia is still sitting in its sideways range. PayPal won't stop bleeding. Tesla, peaked out around $500 on this robotaxi excitement around Christmas. But look at these hardware stocks. Here's IREN, just can't get back. You're down 16% today. So you've now retraced about 40% over here. CoreWeave also can't make it to new all-time highs. Not a surprise to me that this one's trending back to our support line at 0. We've got Alt 5 over here. I think this one's, it's my opinion, I could be wrong, but my belief is that this company is a scam. A micro strategy, unfortunately, has also just hit its all-time low over here. Well, I should say not all-time low, but its lowest level since all-time low over the last year is the more appropriate way to put it. You basically fully U-turned all of the enthusiasm for it, and you're now sitting at 2024 pricing. And unfortunately, the next stop on our line chart is 39, which would bring you to about the lows that you saw at the beginning of 2024. So within that 1 year time span over here, actually about 9 months, you actually saw it rise from about 39 to that 120 level. It looks like we're going full port U-turn over here. Pretty depressing for the market overall. Apple, though, for those concentrated into Apple, doing quite decently here. People kind of seeing Apple as insulated from, ironically, all of the artificial intelligence spending that people so long bagged on them for. Quite remarkable. Now, another thing to keep in mind is a lot of these stock sell-offs are being driven by this belief that, software is all going to get replaced or creativity is all going to get replaced by artificial intelligence. That's quite a bullish outlook for artificial intelligence that I heavily disagree with. I talked about this a little bit this morning, just briefly in the course member live, but it was really just as a way to sort of explain or teach. This isn't meant to be a pitch. But what we're seeing with artificial intelligence is we think there is a plateau. And we think that a lot of people are waiting because they think, what's the point of developing our own machine learning technology? What's the point if artificial intelligence is going to go to artificial general intelligence? And based on what we're seeing, we don't think AGI is coming. Not anytime soon. We think what we have are really good tools of AI, and so we can use those AI to create features and functions that haven't previously existed by training our own machine learning. So the reason I just use HouseHack as an example is because I believe that a lot of this sell-off in software is overdone. The problem is when you get these sort of sell-offs in software, Bloom Energy is still actually holding up. When you get these sell-offs in software, you risk leading to layoffs. Which is the worst case scenario because we don't have room for layoffs. Just to make sure I don't get in trouble with the SEC, remember, yes, we do have a fundraise open for Reinvest. It does close on February 6th. And this video is not a solicitation. You can always click the offering circular button here. It takes you right to it. Or if you click invest, you could also click the offering circular right here. It gives you the details, 5% yield through conversion, real estate backed, invest with credit card, ACH wires, no fees, investment round closes Friday. Okay, we already know all that. So let's go take a look here at the ADP report this morning. Let's go ADP. Oh, Cody, the course live. Oh, okay. I can fix that. We'll take a quick peek there. And then what we're going to do is we're going to grab the, what's it called? We're going to grab this ADP report and see what's going on there. But let me see if I made a little whoopsie doopsies. It's possible. Let's listen to Besson just for a moment here while I figure this out.
Time has expired, and I recognize the ranking member of our Housing and Insurance Subcommittee, Mr. Cleaver of Missouri. You're recognized for 5 minutes.
Thank you, Mr. Chairman. Unfortunately, this is an embarrassing kind of a hearing. I've been on this committee 21 years. We've had all kinds of conflict. In fact, I was in here when...
I don't really care. I don't want to hear this. Okay, good. So, somebody here says BTC is nosediving. Yikes. Yeah, you know, it's, and somebody else says not so. Why? Oh, what is it with the technology today? Should be streaming on X. It says, we've got that indicated up. Let me try here. Yeah, there we go. Thank you for that. I appreciate that. All right, very well. So, all those little technical glitches have now been solved. Now we should be live on X and also, yeah, there we go. And also YouTube, everything's fine. Okay, perfect. So let's go ahead and look at the press release here on the ADP report. Unfortunately, the ADP report was not great. This is the ADP report for January. The data trend has been that we were looking for about a 48,000 job gain. Unfortunately, what we got this morning was actually 22,000, which wasn't great. So we saw a little bit of a slower than expected read here. It's still positive, but it reiterates to us how little room or capacity we have for layoffs. You know, massive decline in private jobs in 2025. Private employers adding about 400,000 jobs, down from 771. We've seen a continuous and dramatic slowdown in job creation, and wage growth has been stable. Now, where we could see, you know, most of these are plus or minus zero, but where we see the largest pain is actually right here in business, services, and professional, which is exactly where the AI fear is, right? This is exactly where the artificial intelligence fear is. And what's offsetting it is mostly healthcare. Healthcare and education added the largest right here at 74,000. So if it wasn't for these sort of more lagging industries, we'd really have a problem. You could see here, yeah, let's see here. These were the regions, education, health services. So they don't break those out, unfortunately. I was hoping that they'd break those out, but it doesn't look like it. Education, health was a standout. Yeah, no, they don't. Okay, and then it's pretty broad-based, though. You know, you've got 17,000 jobs in the Northeast, minus 11 over here, minus 10 over here, 25 over here. So it's not like one region is really seeing the big swing. Although I will say the South Atlantic number is pretty wild right here, negative 76,000. That's pretty aggressive. And interestingly, you know, small establishments added zero is actually the largest of companies that had a net negative result on payroll. So that could be Amazon, for example, who is an ADP customer. So not ideal. This did add a little bit of weight to the downside for the broader market, unfortunately. So if we take a peek at, let's see here, where are the Qs sitting today? Qs still down about 1.24. Look at that perfect bounce there at 607. It's actually positive to see that bounce right here. Getting a little bit of a recovery over here on SanDisk as well. Oracle, yeah, still leaking, unfortunately. How's Disney doing? Disney's trying to recover a little bit. Look at that, coming up from about 103 after its earnings. Okay, let's go see what is actually news out there. So, let's find out. All right. So, the information, Amazon discusses getting special access to OpenAI tech. As Amazon weighs an equity investment of tens of billions of dollars, the companies are also discussing a commercial agreement that could require OpenAI to dedicate its own researchers to developing Amazon products. Oh, wow. That's actually very interesting, because what it sort of indicates is that in order to get money, these companies are becoming more demanding, right? If everybody so desperately wanted to get in on artificial intelligence, then you wouldn't really have the right to make demands. So I actually see that as somewhat of a red flag on that OpenAI fundraise. So OpenAI fundraise, red flag. Let's write it down. OpenAI or Amazon possibly requiring OpenAI help customize and develop Amazon's own AI products in exchange for an investment. Again, let's write that down. If people were climbing over each other for access to OpenAI shares at this valuation, Amazon would not be able to make these demands. Kind of useful to pay attention to. What else here? Amazon could customize its voice assistant features. We're focused on a strong partnership. This is more like a contract than an investment, right? Sounds like sort of a contractor relationship, work agreement. Sounds more like that than it sounds like anything else. That's clear. Not clear how much of a discount Amazon would get from OpenAI. Discussions show the lengths of what does OpenAI may go to raise capital. Yeah, exactly. Shows the length that OpenAI will go to raise capital. That's bearish. Let's see here. Some talk about potentially contributions of more than $60 billion in a new funding round. Okay, such a deal also help Amazon's efforts to offer consumers and business AI software that stands out in a crowded market. Right. Or not. Okay. Let's see here. Amazon employees have faced restrictions on customizing models from Anthropic. Meanwhile, Amazon's efforts to create its own AI haven't lived up to expectations. Pending this mega deal shows the two companies are increasingly mirroring the kind of circular arrangement Microsoft and OpenAI forged at the start of the AI boom. OpenAI is renting AI servers from AWS. Bigger rental agreement than with Microsoft. OpenAI is trying to get $100 billion. Tranium chips. Two sides have discussed potential commercial partnership. Anthropic's had restrictions. Blah, blah, blah. Yeah, none of that rest really matters. I think what the most interesting there is, it's kind of like, just for comparison's sakes, we're not anywhere in their money raise levels, but I look at this and I think, okay, just for my little startup, I look at this and go, I'm not having to offer people like, oh, hey, if you invest in HouseHack, we'll buy a bunch of your product, right? I've done that for nobody, and so we raised $15.1 million in 90 days for a little real estate startup. Through YouTube, which I think is really incredible. But if I had to start going, hey, in exchange for that, we'll buy all your hardware, we'll buy all your chips, we'll give you a contract relationship where you could develop stuff for us, or whatever, or I'll buy your home from you or whatever. That then all of a sudden it's sort of like it suggests, okay, well, isn't that then weaker in terms of an investment moat? That's my take. Anyway, going right back down to 607 there. That bounce didn't last. Look at that, almost down 16% now on AMD. Yikes. So anyway, I thought that's an interesting piece. Somebody says, would you do an interview with Michael Saylor? What's up, Max? No, I don't really have. I don't. He would not like doing an interview with me. Let's just put it that way. I would ask questions that nobody's asked before, and it would be quite uncomfortable. And so I don't think it would go anywhere. So I'll probably get kicked out or killed. Why big tech companies are racing to fund OpenAI? Well, yeah, it's the big circle, right? I mean, I love the image right here, which they probably did with AI anyway, but Nvidia could invest around 30, Amazon down for 20, Microsoft looking at 10, SoftBank will bring in money. Colleague reported all of this. Okay, interesting. Current fundraise rumors. Okay, so Amazon 20 bill, Nvidia 30 bill, and SoftBank 30 bill, Microsoft 10 bill. This could slow. These are public. So if they get punished by investors, these commitments could slow absent other justifications, like Amazon's justification above about, oh well, hey, they're gonna do special stuff for us. So all right, let's see here. OpenAI, builds many companies, so if you're schedulable about the numbers, more concerning reasons. One is that OpenAI is facing growing skepticism from markets about its cash burn, future profitability. OpenAI has effectively funded its data center build-up by leveraging its balance sheets. Investors have signaled there's no limit to how much they'll lend to pay bills for the future, right? Blah, 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 blah. I mean, that all of this works until it doesn't. And the way it doesn't is you just continue to get a sell-off in Microsoft stock, for example. And a sell-off in Microsoft is going to punish them potentially for more investments into OpenAI. I mean, they're up 1% today, which is nice. But look at this, we're at 408. I mean, from peak, we've destroyed at Microsoft 415 divided by 553. Just destroyed 25% of value over here. Somebody says Google and ARM cooked after the bell today. Oh no. The foreshadowing, the $2 foreshadowing. Yeah, very interesting. And then the Qs, right at 607. All right, let's keep going here. Let's see. So we saw this. China's response, blah, 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 AWS. Data centers in space are a long way off. Oh, well, yeah, I totally agree with that. Venture capital and the Epstein files. This is interesting. Reflects entertainment's decline. Let's talk about that. This, and this. All right, let's see what we have here. So, NVIDIA's application to sell the H200 is still awaiting final approval from the government, nearly 2 months after Trump approved the sale. That's interesting. Jensen brokered the deal. That's still on ice. NVIDIA to China deal on ice. Still waiting for H200 export license. It's been 2 months since Trump approved it. But it needs formal approval. Well, that's useful to know. All these deals on ice. Not great. Okay, what is this entertainment decline they're talking about? Disney's parks chief. Disney named parks chief. Oh, the parks chief is taking over. Yeah, I didn't know what position he had before. Disney's appointment reflects the fact that it is now primarily a parks business rather than an entertainment company. You might not realize that from the Hollywood-obsessed news coverage of Disney, but its financial performance proves it. Its experience segment of parks, cruise ships, and consumer products generated $10 billion in operating income, while the entertainment and sports generated $7.6 billion. Wow. Yeah, no kidding. I mean, that's always been the joke at Disney, that, Disney takes the profitable, high-margin pricing power parks and cruises and merchandise revenue and blows it on making, streaming content. That's been the sort of joke. Disney Experiences segment has grown steadily as it opened new parks and expanded its cruise ship business around the world. And I mean, they have great quality, honestly. I mean, they have the pricing power. Over the past decade, ESPN and the cable channels have declined. Well, that makes sense. Replaced by streaming. Right. Disney's now making decent money in streaming, but nowhere near enough to offset the loss in TV. Wow. Wow. PayPal's board must be wishing Dan never left. The company's revelation that the HP CEO would suddenly succeed. Alex puts the spotlight on the latter hiring and why Schulman, a longtime CEO, to leave in the first place, blah, blah, blah. Okay, yeah, whatever. All right, these companies are lost for direction. All right, AWS on space data centers. One of the biggest problems, by the way, is cooling. And somebody asked me, they're like, Kevin, what do you mean cooling? Like, isn't it cold in space? Excuse me. Excuse me. It can actually be very cold or very hot in space. So, cooling in space isn't as intuitive as we think. We think when we fly, it gets colder as we go up. But the problem in space, there's so much radiation, and obviously, variations based on where you're orbiting. It can get very hot and very cold. The problem with cooling in space, though, is you don't have airflow. So you can't use fans to cool GPUs. You have to cool them with a liquid. Well, that's not that easy either, because you need a liquid that has to sustain at, negative 140 degrees, which is very cold, and positive 140 degrees, which is very hot. And then it still has to be a functional product. So a lot of people use in space, like the space station uses, I believe it's like an ammonia-based solution that's exceptionally toxic to humans. Like if you go service an ammonia line and you get some of it on you and you take a whiff of it, it could kill you instantly. It's very, very bad and noxious, the stuff that's used for space cooling. And, I don't think we're as close as people think just on a cooling basis alone. So cooling is a substantial issue for space data centers. I do think that, hold on, I think Lauren's calling me. Oh. Okay. All right. So space data centers, to me, I think, this is just my opinion, and I've said it in my space data center video. In my space data center video, which I think I have that. I think I called it the SpaceX data centers. Meet Kevin. Let me see if I can link that video. Oh yeah. Okay, there it is. I posted it a month ago. In my space data center video. Okay, good. There we go. I talked about how speculative data centers in space are and the challenges, including the physics of cooling in space, how hard it is, right? So I'm curious to see what the AWS staff suggests. The AWS staff okay. Okay. One sec. Oh. Okay. Okay. So, okay. Okay. So, sorry about that. AWS says existing technology is pretty far from making space data centers possible. AWS current tech far from making space data centers possible. And this sort of aligns so far with what we've studied. I don't know if you've seen a rack of servers recently. They're heavy. We have not built a permanent structure in space on the moon or anywhere like that. I know Elon's going to launch 1 million satellites. There are not enough rockets to launch 1 million satellites yet. That's also kind of a good point. So, yeah, no, Nvidia chips using normal water on Earth is different than space. In space, you have substantially larger temperature extremes. If you would your water lines would just freeze in the cold of night. It doesn't work. So, like trying to apply a technology that works here on land to data centers in space is retarded. I'm going to make a let's do this. It was a 34-minute sort of deep dive analysis into this. I'm just going to change the title here to just something blunt. We're going to call it SpaceX and SpaceX data centers in space. There. All right, I'm calling it Scam or 10X. SpaceX data centers in space. Is data centers one word or two? Or how is everybody writing it these days? 2 words. Good. All right. Let's see what else they say. Earlier this week, rocket satellite company announced they'd be merging with XAI, blah, blah, blah. We know that. Bezos, who also founded Blue Origin, says that said in last fall, data centers in space could be built within the next 10 to 20 years. See, I actually think that's a reasonable time frame. That's a very reasonable time frame. I think that's very reasonable. Yeah. All right, good. So now let's see here. What else do we have? Okay, we talked about that. All right. Good news is, there's plenty of room in the United States even to build data centers, which I'm pretty excited about, because I think that these are all just giant commodities, and they're going to actually make the final products, like the final winners of artificial intelligence, I think will be the companies that provide really good value to people. Obviously, that's what we're trying to build with our HouseHack AI. If we can nationwide cast a net and go, hey, here are the best 20 houses to buy across the entire nation, right? That's like instantly. That's really valuable. Or the best 1,000 homes to buy, whatever. You could scale it to whatever level you want. It's quite incredible. And it doesn't require AI to get any better. AI could stay at this level and it's totally fine. All right, so Iran plays hardball with the U.S. That's not great. That could become a whole nother issue. Washington Post lays off 1/3 of its staff. Didn't Bezos buy the Post? Washington Post is cutting 1/3. Mass layoffs and a broad strategic reset. Wow, WAPO. Post lost $77 million in 2023 and $100 million in 2024. Wow. They're getting smoked. Yeah, the paper's owner, Jeff Bezos. Yeah. Deep gutting. Maybe it's because it's a left-wing rag with little viewpoint diversity. For years, I read op-ed section, you're racist, climate change, Trump is Hitler, rinse and repeat. I mean, I don't think you should judge the Washington Post on the opinion piece section. I mean, really any paper, right? I actually find that they tend to get some decent scoops. The fact that they're losing money like that is obviously a bad sign, but they can often actually get some pretty decent exclusive reporting. So let's take a look at this. Why nobody really knows the scale of the U.S. housing crisis. Okay, let's take a look at this. America faces a housing shortage. Moody's says it will take 2 million homes to resolve that shortage. But Goldman put the number at 3 million. Zillow says 4 million. Brookings projects 5 million and McKinsey 8 million. Congressional Republicans insist it's 20 million. There are other economists who contend there's no shortage at all. There are 146 million homes. Of those, 8.1 million are doubled up homes, meaning people share space with non-relatives. It's an interesting phrase. This would be like roommates, basically. 3.4 million vacant homes available to rent or buy. Well, but those could be homes in transition. I mean, because that's like 2%. You know, that could just be properties in transition to being rented out. I mean, like when a home is under construction, it's going to be vacant, right? I mean, we just bought 12, and while we renovate them, they're under construction, they're vacant. You know, and then we rent them out, and then families can live in them where people weren't able to live in them before. So, you know, that's providing housing. Let's see here. Several analyses zeroed in on 2 questions. How many homes are vacant, and how many consumers have developed striking out because of the cost? May seem counterintuitive, blah, 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 blah. What constitutes healthy vacant levels? This looks like, what is this? Census Bureau. What is this? Vacancy rate tumbled after the housing boom ended. Fine. Housing costs are prohibitive. People live with their families more, right? I mean, this all skews the data, because if people aren't forming households, then, you know, how do you actually figure out how many more homes that you need? Point is, you know, cities are really bad at delivering more housing. And that actually makes housing such a good investment, because politicians really suck at enabling housing. They think what you should do is have rent control, which then reduces housing building. They think that you should build affordable housing units. Well, that then also reduces construction. So as usual, the government, you know, generates this real backwards math for and backwards incentive structure for, you know, housing and housing affordability. All right, what else? Most read. Trump plans to install Christopher Columbus statue outside the White House. Okay. All right. Whatever. Let's get back to financial stuff. U.S. shoots down Iranian drone outside, or just outside of the airspace of a U.S. aircraft carrier. Really? Look at this. This is a Washington Post piece. U.S. forces shot down an Iranian drone approaching the aircraft carrier U.S. Abraham Lincoln in the Arabian Sea. Wow. The incident occurred about 500 miles from Iran's southern coast. Somebody says, Kevin, go check out App Lovin'. What's going on with App Lovin'? Oh, wow. Q's 603.97. AMD now down 16.7. Well, like we said in the alpha this morning, if AMD drops even in the first minute, it's a red flag for the Qs. And oh my gosh, was it a red flag for the Qs. Also, SanDisk. This trailing stops are going to start triggering. Just accelerate the down for people. Wow, SoFi down 6%. What's going on with App Lovin'? App Lovin', 14%. Wow, off a cliff, huh? It's almost down half. That's remarkable. Okay, what do we have here? So this was a Shah at 139. Oh, they've used this to go, you know, bomb Israel, or try to. Actually, I think I have, if I go to my search feature, I might actually have a picture of it here. Do I? No. Aw. Oh. Here we go. 136, 131s. This was a 139. How interesting. Because these are the drones that Iran, you know, likely manufactures in, or for export to Russia. See, Russia is working towards manufacturing a variant of the Iranian drone, which is called the Garan 2, to supplement its dwindling stockpile. This is the 136, but they shot down a 139. It's very interesting. Yeah, here it is. Russia has Iranian Shahid drones assembled in both Russia and Iran. Look at this. I wrote about this back January 2024. You actually got a lot of data in here. Like, quite useful. All right, what else? That's all in the Meet Kevin app, by the way, if you ever want to look at Meet Kevin app. flying with unclear intent as it approached the carrier despite personnel using unspecified de-escalatory measures. Yeah, how do you tell a drone to stand down? An F-35 fighter jet shot down the drone. That's cool. An F-35. That's awesome. Man, I want to fly an F-35. That'd be sick. But I will not. All right, what else do we have here? Russia spy spacecraft have intercepted key European satellites. That's not good. Reading the runes on Warsh. Borders are removing 700 troops, or ICE agents rather, from Minneapolis. Nova Nordisk. Disney, blah, blah, blah. Banks seek out new buyers for Oracle data center lows. Here we go. Here we go. That's what I want to see. Look at this. All right. Let's go back to our AI news portion right here. Oracle. All right. Oracle. Bank loans in Financial Times. Let's see what we got. Banks are tapping investors such as insurance companies and private credit as they try to find buyers for tens of billions of dollars of loans tied to Oracle's data centers. Exactly. This is why, exactly why I keep saying that the whole private credit slowdown isn't idiosyncratic. It affects everything. So, you know, banks going to private credit to bail out Oracle data center loans. Okay, banks are, I'll say. To me, this is a red flag. Private credit is already seeing money run for the exits on fears of fraud, AI software exposure, and poor performance. Relying on private credit to buy out bank loans for data centers is a bad omen, in my opinion. Okay. At least $56 billion worth of debt have been given investment grade ratings. Right. While banks have mostly tended to fund a project, finance loans for construction of toll roads, airports themselves, massive deal size of recent data center projects have overwhelmed this source of demand, leaving tech giants keen to find new sources of capital. Right. We basically tapped every single finance bank possible, but there are only so many banks. Banks will have to offload that risk if they want to keep lending. Wow. Yeah. I mean, they're bluntly saying it. They're bluntly telling you. They're running out of money. Which is bad because that affects the entire cycle, right? You know, if First Brands, the founder of First Brands just pled not guilty to fraud that just came through the wire. First Brands CEO just pled not guilty to fraud. Yeah, we'll see about that. Okay, so let's see here. Opens up a new pool of institutional... Right, so they slapped an investment grade label on it. Slapped investment grade rating. Well, that's okay. Rating on it to open up pension funds. Okay, this sounds like 2008 all over again. 2000, the books on 2008 are writing themselves. 2007, 2008. Let's see here. What is that? Mexico consulting on how price floors could be included in agreements on trade. U.S.-Mexico announced plan to develop coordinated trade policies. U.S. and EU will sign memorandum of understanding to boost critical mineral supply, blah, 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 blah. Okay. Somebody says, SH90 is hitting the fan. I work as an engineer at a major auto company. We are cutting production and shifts. Manufacturing's been rough, especially autos, with how high rates have, been. It has definitely been rough. Oh, crap. Hold on, I gotta make a quick call. I totally forgot that I booked this for this time. Well, good thing I noticed it right now. Actually, make sure I actually get the phone call. Oh, I think they're gonna call me. Okay, cool. It hasn't come in yet. Well, what it does, we'll just listen to some TV. And then we'll comment on it. But anyway, so I gotta be alert for that. Anyway, attempts to find buyers for debt comes amid a rapid increase of debt issuance by big tech companies. Half of the largest 10 buyers in the U.S. investment-grade bond market set to be so-called hyperscalers by 2030. Investor concerns have been growing about Oracle's aggressive commitments. Ratings on data center loans cover Oracle's leases on $38 billion of data centers. We're talking about, so it's a total of $56 billion in this article. Referenced in this article. Hold on, you know what? Let me see if I could just delay this like 30 minutes. Because they haven't called yet anyway. Let's see here. Send. Okay, perfect. See if I can buy myself a few minutes. Oh, that's good news. Huh. Okay. Okay, cool. Good. All right, so let's go back to where we were. Both loans are being marketed to investors. Rating on data center leases, right? Blue Owl, credit rating. Yeah, let's see how Blue Owl's doing today. Because, I mean, obviously everything's dumping hard today. Well, not everything. Microsoft's up 1%. Wow, the Qs are almost down 2% again, huh? Oh, trying to get back to 607 here. SanDisk still down 11%. But let's look at Blue Owl. See if I go Blue Owl. Blue Owl Technology. This is their fund. They're actually up today. That's interesting. They've been coming down quite a bit. And then you could really see that pain right here on Blue Owl. Boy, they've gotten hosed. And then if I go to Blue Owl Capital. Oh, wow. That's the company. Wait, Blue Owl Tech. Which one's which? No, this is another fund as well. They just have so many. That's a BDC, Business Development Corporation. Blue Owl. Owl. There we go. This is the company. This is the private credit lender. You know, they've come down from $25.55 down to under $12 now, so more than halved. Their BDC has fallen off a cliff, and so has Blue Owl Tech. These are the companies that they can't get rid of these loans anymore. So they can't get rid of these loans, so they're like, all right, well, let's slap an institutional rating and let's sell it to pensioners, which honestly is like scary. Wait, where did they say? Oh, no, hold on. Where was the pension part? I thought I saw them say pension up here. Investment grade ratings, allow banks to attract a broader. I thought they said pension. No, maybe they didn't. I guess not. I swear I saw it, but oh well. Okay. It opens up a new pool of institutional money that previously saw these assets as too risky. Right. So slap a better rating on it to try to keep the Ponzi going. I'm telling you, the 2007 books write themselves. Software company, Monday, raised separate $25 billion. We saw that. Credit rating has been extremely rare. While receiving a credit rating during construction has been extremely rare in the data center space, it's now becoming common. Right. Give everybody the rating, boys and girls. Everybody gets a rating. You get a rating. You get a rating. You get a rating. Crazy. Almost all large data center deals are trying to get a credit rating now. More than a dozen banks have lent against Oracle's long-term lease commitments, which are priced at 2.5 over SOFR. It's actually not that terrible of a spread. Borrowing costs for newer Oracle-linked data center projects have widened, 3 to 4.5. Levels are closer to junk ratings. Right. Yes, I agree. The pricing of debt has not yet been sold on to investors. Some investors are hesitating about whether to purchase the 2 syndicated loans in anticipation of higher returns. Right, so they think that they're going to get better yields if they just wait. Banks are getting nervous. Banks are nervous about increasing their exposure to AI. So they're trying to offer higher interest rates. JP Morgan and MUFG, which are leading the finance data center project, declined to comment. Of course they did. It's like, yeah, we are trying to offload the bag. Man, the banks are trying to get out. Banks colluding with... Yeah, what a line. Look at that. Banks colluding with rating agencies. Sounds like 2007 all over again. No kidding. Recommend. That was a good one. In summary, the debt is so large the banking system can't handle it. I don't know about that. It's ultimately, but to do more, they can't do more, basically. It's ultimately backed by a company with a negative margin and competitors that are overtaking. Yet the bank is somehow investment grade, or the debt is somehow investment grade. Right. That's the scam. Okay. Let me call him.
It's been interesting. So I was telling Frank, this part was just for fun, but yesterday, just for fun, we said, here's a list of all the S&P 500 companies and loaded them into ChatGPT and Claude just to see how the two would differ and say, should this be an AI beneficiary or hurt by AI? And then the second question we asked was, does Claude code benefit or hurt? Now, there is a lot of self-conflicted self-interest on the Claude responses on the Claude code part, but there was so much conflicting ambiguity, even on the ChatGPT and Claude side of it, that it was interesting to me that there was not consensus. Now, we've been doing work on these names for the last few weeks completely. And Liz, where I also disagree a little bit is, you're right, there's tremendous multiple compression, but we still think there's not enough multiple compression on many of them. So if you look at a Datadog, for example, Datadog seems like it should be a beneficiary from all of this. It has had multiple compression. It still trades at like 300 times earnings. Or you take, Palantir is still at 100 and change times earnings. Who else was I looking at? There's another one that's really compelling, but it's at 99 times earnings. So even with multiple compression, there is not the margin of safety broadly out there, I think, to justify the pain and the ambiguity that AI and Claude code has introduced in this space. But again, the research process is not going to be short with these. So you start it today. I'm with you completely that there's opportunity. Right. I would just rather, go on individual stocks on that.
Snap, come over to you. Are you starting to research, looking for possibly names to buy? Are you writing off this sector completely? How are you viewing the broader space and the impact it's having on the broader market?
Yeah, for me, Frank, it almost feels like a protracted DeepSeek moment that we had last year, where headlines are being developed. Obviously, yesterday was kind of this Anthropic news on what innovations are happening in legal. Maybe you don't need counsel in certain respects to review contracts. We'll see. But for me, software, to Jenny's point, it still is expensive, right? So it's still 8 times sales of, the software complex. And I think you have to be discriminated in terms of what names you're looking at. Also, to Liz's point, I think it can go longer, right? A lot of these stories. So it is, for me, a potentially inching into the story. But I think the main point for me, as I look at the traditional SaaS model, there could be some harmony with AI agents and the traditional SaaS model, where these two technologies could work together in a productive way. So yes, there will be winners and losers, but you just have to continue to pay attention. I wouldn't be selling here, but I potentially would be inching in going forward.
All right. I want to move on to the chip space. Looking at AMD shares pulling back quite a bit today. You can see they're down more than 16%. The street saw the guidance is a bit soft. Lisa Su came on our air, talked a lot about their AI server system, Helios, in the back half of the year, possibly being a big boost to the company. Joe, you own this name. How did you view this report? Do you think this is simply an overreaction, maybe fueled by some of the weakness in software that seems to be pushing this down? Or is it just the fact that it just wasn't good enough?
I don't think I need to respond with a dramatic, lengthy answer defending it. It's fatigue. I mean, that's what it is. It's fatigue. It's pulling back. It's had a significant move since April. It's pulling back into the critical supportive moving averages. It's going to remain in the ETF for us. It's been a strong position. And I think it depends on where you've entered AMD. If you have a degree of runway where you entered into this in the second quarter or third quarter of 2025, you have more room to play with where your exit ultimately may be. But unfortunately, if you were late in this in the fourth quarter or at some point more recently, you might be staring at what is an unprofitable trade. And you just have to manage the risks surrounding that and understand ultimately that there is going to be exhaustion surrounding what has been such a compelling, strong tailwind for markets over the last several years. That powerful force dissipates at some point. It doesn't go away. It just dissipates. And I think this is a reflection of it. It needed to exceed the wildest and strongest expectation, and it did.
All right. By the way, Wolf out with a note saying they would use tech weakness to buy AI-related semis, basically saying, looking at this weakness because they feel like that chips are unfairly being punished. Do you agree with that take when it comes to the chip space broadly?
I think in certain instances that applies. One name that might work towards is Texas Instruments. Texas Instruments, which we added to the portfolio recently, that's a little bit of an AI story, but that's more about a recovery in autos. That's more about a recovery in its core business, which is analog chips. And again, this isn't a stock that has rode along with the tailwinds of the semiconductor industry over the last several years. This is a stock that's had a very strong rally, up 40% from November. Why? Because it's seeing the turn in the core business. You could say, okay, it's an improvement of the economy, pick whatever reason you might cite for that, but it's industrial automation, it's improvement in the auto industry. To a degree, it's AI, but that's really where the strength is coming from here.
All right, Jason, you own Qualcomm, actually reporting later today. With the idea of fatigue in the market right now impacting AMD by a lot, shares down over 16%. How are you looking at this upcoming earnings report and just this company in general, actually trading higher going into its earnings, up about 1.75%?
Yeah, so they had a downgrade a couple weeks ago by Mizuho, and it was really kind of this story that we've heard a lot about Qualcomm with kind of Apple moving away from their business, and obviously the $28 billion handset business for Qualcomm, and $8 billion of that is Apple, right? So that is a significant story. But I think the other thing for me is what has started to materially grow is IoT and the auto business. And again, we probably need those numbers to grow much faster than they have over the last couple of quarters, even though they're growing at almost a 30% clip. We're going to need to really see those numbers continue to spike to potentially offset what that loss might look like for Apple. And I think it is somewhat overblown. I think that's going to take some more time. But, listen, Qualcomm has definitely underperformed the market and underperformed the semi sector. So we're going to need to see some catalysts there for it to continue.
We're looking at the broader chip space, Liz. Outside of memory, where there's a shortage, and just heard an announcement today from one CEO saying there's going to be a shortage until 2028, basically. How do you view the other areas of the chip space? Cyclical sector, we've seen huge run-ups. AMD is one example. Of course, Nvidia is another one. How are you viewing this right now? Is this possibly the time in the cycle to take some money off the table, or do you ride out this volatility?
Well, so first of all, to Joe's point of fatigue, yes, I think that's the case. I think that's happening in the AI trade broadly. I don't think that's just even happening in the chip space. And the rotation that we've all been talking about and that many of us have been hoping for, the money has to come from somewhere. And a lot of the money has come from the stocks that took us to the point of highs in, the big 10 names in the index, highs in all of those AI darlings. Well, now we're seeing some of that come out, rotate into other places. I think that's part of why we see the Dow as the only major index that's up today. Traditionally, I would look at the chip space versus software and say it's a cyclicality signal. Right now, we're seeing software having underperformed semiconductors by 20%, right? And Jonathan Krinsky has pointed this out just recently. There's such a wide spread between the performance of semis and software right now that at some point there's got to be some mean reversion just from a technical standpoint. Now, that might mean that semiconductors have to come down, or it might mean that software has to bounce, maybe a little bit of both. I think semiconductors, broadly speaking, in the AI trade will continue to be an okay place to be. But if you're trading these names and not investing in these names, this is probably not the right time to do that.
Totally agree with what you said. The AI fatigue is not just isolated to semiconductors, but I also think it's interesting because if you're sitting out there and you're looking at the market from a macro perspective and you're the bear and you look at what has unfolded in the market, the correction in crypto, the correction in precious metals, the significant precipitous decline in software, technology kind of rolling over, momentum rolling over right now. But guess what? The S&P 500 is still in a pretty good place. And this really has not damaged the prevailing bull trend that's in place for the year.
I think we're about 1.5% away from a new all-time high. So still within striking. I mean, it could even happen today. Unlikely, but it could even happen today.
Just the rotation is so dramatic this year. And you know where my focus is. It's always kind of more value, old economy. And you look at the Schwab High Yield Dividend Index, or ETF, for example, the ticker's SCHD. It's up 13% for the year. That's wild.
Well, people are looking for safety.
But it's
like the dramaticness of this rotation is, to me, quite powerful and extraordinary. Who knows if it lasts past the first quarter? I'm enjoying it now, but it really is interesting.
I think it's reflected in the elevated volatility. VIX at 19. If you're a hedge fund, if you're a tactical trader, this is a great environment for you right now. Right. You're doing well.
All right. Speaking of that, we have two big earnings reports coming up later. Liz, I'm just going to turn back over to you. Amazon and Alphabet report this week. Two of the Mag 7, two hyperscalers. So we're talking a lot about fatigue. Could this possibly, with all the drama we're talking about, just calm everybody down? If we get good reports from both of those, good growth in the cloud business, and for Amazon, also some good growth when it comes to the retail business.
I think the story right now, first of all, the hyperscalers that have reported already have announced increased CapEx. So CapEx is going to grow again this year. I think it's in the high 30s%. That's the expectation. So that train has not slowed down. We're continuing to spend. We're continuing to be optimistic about how that spend might produce revenue going forward. I think the story will be, and has already become, a lot of these companies that are established, they have established customer bases before AI, before this whole story. Is that established customer base going to be as lucrative for AI as we go ahead? And part of it is cloud revenue has to maintain its growth. It has to at least maintain its strength. And depending on what the company is, I don't talk about specific companies, but depending on where they found their customer base and how sturdy that customer base is there growth going on outside of some of these stories of the moment? And we saw what happened earlier this week, last week, with some companies that weren't seeing as good cloud growth as we expected. So I think that ends up being the real linchpin in this. But to your question, will both of those calm all of these fears? No,
or either.
I don't think so.
Really?
Because I don't think it has to do with hearing bad results out of the hyperscalers or good results out of the hyperscalers. Does that have an impact? Sure. But I don't think that's what this software sell-off is about. I think just generally speaking, investors are looking for other places to find opportunity. And everybody got really skittish about valuations. And when you get skittish about valuations, you're looking for any opportunity, any excuse to say, oh, there it is. There's the big reason. And then you see some of the selling beget selling. And I think that's what we're experiencing in some places.
Jason, coming over to you very quickly. You own Alphabet and Amazon. Are there one of those that you have more confidence in, one that you're more worried about?
Yeah, so I like them both, actually. And obviously, they've traded better over the last several months. I think as it relates to Amazon and thinking about AWS, so clearly, to Liz's point, we're expecting a reacceleration. I mean, 21% is expected. I think they probably need to show 22 to 23% for the stock to continue to run. Ops margins close to 12%. And they've obviously slimming down the workforce again with that announcement of 16,000 layoffs on, about a week ago. But again, the big story here is the CapEx as well, about $35 billion this quarter. The market is asking for a return on CapEx. I mean, that's obviously the story that's playing out. I think Google, a little bit of different story. I mean, fully integrated, traded very well all of last year. Gemini 3.0 was a hit. So I just continue to watch that and be hopeful as we move forward through the year. And Google Cloud also growing at 35% year over year. So I continue to like both of these names.
I want to bring one more voice in this conversation. Halftime committee member Bill Baruch. He's actually trimming his holdings when it comes to Alphabet and Amazon ahead of earnings. He joins us right now. Bill, talk us through this trade. What's your thought ahead of earnings?
Yeah, this started last week with a little bit and then more yesterday. Alphabet and Amazon were both about a 7% holding in our main portfolios and about a 14 and 15% holding in our concentrated portfolios. So this trim, we brought it down to 5.5% each and about 9 to 10% each in the concentrated. And really, it's less on a conviction here and more about risk management. We feel about the indices right now. They're going through some rotations. We're going to get these earnings, and we want to have the ability to be flexible through the earnings report, but as well what the indices turn out to do here in the next couple of weeks. With that said, I think there's definitely some potential headwinds. If you look at Alphabet, everybody on the desk has already pointed to it. CapEx, they're moving more into the energy space. What kind of CapEx is going to be a surprise? Cloud and AI search revenues, they've been a tailwind. Is it enough to offset it? And then Amazon. We saw the reacceleration in AWS last quarter. Are we going to continue to see that? And is the bar already set to be very high? So again, these aren't conviction where we're trimming them down because we dislike the name, but it's getting into a more manageable space for us and give us flexibility. Whether we want to buy these names more after the report or the weeks after, or look somewhere else. There's definitely some other places too.
All right. A bunch of analyst notes about both these companies always, in particular, William Blair saying 2026 sets up favorably for Amazon. So you say you're looking for a re-entry point. Let's say the earnings are very good. Are you worried that you're selling? I know you're not trimming everything, but you're selling here and you're going to have to buy at a much higher level that these reports could actually be good. William Blair goes on to say they think they're one of the best AI plays as the optionality stemming from the technology extends beyond its service to other companies, driving efficiency and competitive position.
I don't disagree with them. That's why they're our two largest holdings. I think at a 5.5% weighting in our main portfolios, it's still a very large holding. In our concentrated, around 10, it's still a very large holding. I think this is more about the risk management move in general. If I look out, I do see a lot of headwinds around April. And our plan coming into the year was we thought the equity markets would have a very strong start to the year. You're seeing it in some pockets, but not all pockets. And, with that plan,
Hey, sorry about that. Anyway, I hope you enjoyed that segment there on this. I don't think, one of the things that drives me nuts, I like the guests that CNBC has that they get on here often. But one of the problems that you have is, man, it seems like the days the market goes down, you get these people coming out going, oh yeah, we're trimming exposure. And they kind of just like reiterate everything, right? Sorry, I had that phone call there. But they reiterate this doom loop, unless you get Tom Lee up, which is honestly, it's so interesting. And it's something for you to know. I think if there's a lesson for you to learn or know, just for the rest of your life, and they're rescheduling the BLS labor report for the 11th. If there's one lesson to know kind of for the rest of your investment career, is these people will always sell you the bullish story because that's how these advisors make money. Imagine you call a financial advisor and you're like, hey man, I want to move my $2 million portfolio or whatever to your financial advisory firm or whatever. And then the advisor's like, nah man, we're going into recession. You'd be better off staying in cash. And then you call the other guy going, hey man, I got $2 million. And they're like, oh great, we'll put you into this fund. We're going to get you the latest and greatest exposure, investment grade debt, this, that, or whatever. They place you. The banker gets their fees. So the guy who maybe told you the right thing to be cautious, to hold on, don't invest right now, raise cash, that guy makes zero money off of you. The guy that's like, nah, man, everything's going straight up. The Tom Lee strategy. That guy makes all the money. So the whole industry is designed to tell you it can never be bad. And now I hope it's not going to be bad because I don't want to go into a deep, dark recession. But keep this in mind. If we go into a deep recession, if we go into, the AI bubble collapses, we get the layoff cycle. I put this together for course members this morning, just sort of like a little simple thing. So I'll just show it to you anyway. I go, here's how this works with CEOs, right? The stock market goes down. The CEO is not happy. The CEO is not happy because their stock-based compensation is at risk or they might get fired. So the CEO complains like the ServiceNow guy starts complaining about the market going down. So they're like, well, we got to get EPS up. Well, how are they going to get EPS up if revenue's slowing down? Well, we're going to fire people. So you fire people and there you go. And then you get your EPS up. But that's how you also induce the very recession that you're trying to avoid is you fire people to to limit your earnings per share exposure, and it's wild. So, in my opinion, this is really a, how should I put it? There is going to be a big bias from the Wall Street advisors and talking heads always to the upside because they benefit from AUM. Problem with that is, are we just breathing life into a bubble that's meant to die? I don't know. This right here makes me a little nervous. Ooh, there's another Oracle logo over here. I want to see what this is. Oracle, yeah. So, this is interesting to me that they're now putting these investment grade credit ratings on Oracle debt, which it's because the banks are trying to offload that debt. That's a red flag. The banks are like, we need to get rid of this. Now, I understand banks also benefit from making a loan and then selling off the loan, right? This is understandable because then you could go make another loan. But they also don't want they don't want to hold the bag. And so that's why when you look at these private credit funds, it looks like they actually turned red today. We're just here recently because some of these were actually a little green today. But I mean, that's why these private credit funds have been selling off. So private credit is like, who's investing in Blue Owl right now? Like, who's throwing more money into Blue Owl to go finance meta data centers, right? I don't know. Sussy Baka, So you could train a parrot to say bye and make the bird look like a genius. Yeah, I mean, and in fairness, the market does go up over the long term, right? Like over the long term, yes, the market goes up. So like, I look at it and I go, hey, look, we've raised a lot of cash, no personal debt, no bank debt at the company or whatever. We're very, very conservative, tiny little bit of stock exposure. And I've got a list of my 11 favorite stocks that I really like. But I'm also fully aware that, the money that we invest or you invest or whatever in the market right now, close to all-time highs, it could get halved, so you gotta be careful. And that's not to be super bearish. Let me show my bear bull scale and let's get to that Oracle article. So if we go to my bear bull scale, but it is why HouseHack is just sitting on cash right now too, so, we want to be prepared. But look at this. I lowered, after we got Warsh, this was a really big moment here. Warsh was the worst case scenario. After we got Warsh, my opinion is that we lost a big chunk on the bear bull scale here. And this is now accelerated by weaker than expected ADP numbers, which both of these numbers, the ADP numbers or whatever, weekly jobs had been at a 32K basis. Some numbers were coming in at a 48K estimate, where everybody's expecting a beat, we get a miss. That's only slightly bearish. We're still in that midpoint range, but boy, Warsh is just problematic because Warsh should make you demand more risk premium for being in the market. You should be demanding higher returns for investing right now because Kevin Warsh isn't going to print his way out of a recession based on his history. Maybe he's a changed man. Maybe he's going to give us a different response to what he's historically done. But I generally believe that you should trust people when they give you, when they tell you who they are. When somebody tells you who they are, believe them. And so, hold on a sec. Give me a moment.
The HIV portfolio, the quarter was good. Shares up just about 7%. What do you make of the outlook? And also just the fact that there's a new CEO taking the helm of this company.
Right. So the new CEO does make us a tiny bit nervous because the previous CEO, Emma Walmsley, was the only one who actually delivered consistent earnings, or consistent expected earnings and met earnings in the last several years. But here's the bottom line, and this goes back to Liz's almost like opening comment, which is when she shifted her stance on where money should be going in stocks. You said you wanted to look for companies with lots of cash. Mm-hmm. And all of these companies, like beyond just GSK in our portfolio, but Regeneron in our portfolio, Pfizer, Bristol Myers, they all are minting cash. So Bristol Myers, for example, has $12 billion of free cash flow
let's see
this
here.
year and next year, getting back.
So let's pop in over here. So Oracle here. Let's see here. Let's see here. It's funny how perceptions change. In September, Oracle raised its estimate of next year's CapEx by 10 billion. That was in September, and the stock rose by more than a third in a day. On Wednesday, Larry Ellison boosted the forecast by $15 billion, and then the stock slumped 13%. It's like a little sundial. Let's see here. The sun moves around. In this case, Ellison's strategy remains essentially the same. Oracle was on course for $280 billion of capex over the next 5 years, according to BNP Paribas. Clients including OpenAI, Nvidia, Facebook owner Meta Platforms have collectively committed to $523 billion of revenue, but there's a growing lag between the cash out and cash in. Wednesday's bump to 2026 spending plan wasn't accompanied by a corresponding increase in revenue. $80 billion plus fall in Oracle's market cap shows investors aren't thrilled about this delayed gratification. The big fear is that the tech companies racing to hone in and sell their AI services may not need all that compute after all, blah, blah, blah. I mean, this is all old news. The size of the debt, what is this? Second, the size of the debt may not end up as cumbersome as feared. Analysts estimate Oracle will end up with $150 billion of net borrowings, up from roughly $100 billion today, but its business is growing too. If all that goes to plan, Oracle's net debt would be about 1.5 times EBITDA compared to 3 times now. That's their net debt. Not all data center investment would be on Oracle's dime. Some customers might bring their own chips, but they've been saying this for a while. They didn't just suggest this on Wednesday. They've been saying for a while that, oh yeah, we're just going to switch to a bring your own chips model. I think that's because they're out of freaking money. I don't think that's a bullish thing. I see that as like, wow, yeah, you guys can't even make the chip investments, which I don't really want to hold the chips either. I get a little bearish about, like there are plenty of software companies that I think are a steal that have massive pricing power. Like Intuit right now is a one peg. It's insane. Like I've been waiting for this company to get cheap. And look at this. Like I'm just waiting for a potential RSI reversal here because look at this. We are so oversold on Intuit. You're at 18 right now. But you've been at 18 over here as well. So I'm waiting for a little bit of an RSI reversal, and then I want to buy the dip over here on Intuit. This is a one peg, and this company has regularly been like a 4 peg. So it's really compressed its valuation, which is fan-frickin-tastic for a company with massive pricing power. And so this does create opportunities, right? So like, while it's understandable to be concerned, like there are opportunities. I always joke, and I mean it's less of a joke. It's also kind of true. Our company is raising money assuming our artificial intelligence is worth 0. This isn't a solicitation for you to invest. Remember, always read the offering circular. You get 5% plus all upside. You can invest with credit card, ACH wires, no fees. We've raised $15.1 million in the 90 days ending Jan 20th, which is awesome. Obviously read the details. But the point of me bringing up this ReInvestAI thing is what I think is so remarkable is, this to me, like our company has 0 valuation on AI. So it's like, the real estate company has its valuation. That's where people are investing in. The AI is already, has 0 valuation because we're raising on a valuation we did before we had AI, our own models. These are our own models. This is not like some wrapper. These are our own models that we train. And it's really cool because I think that like it doesn't matter how bad things get in software. That creates opportunity because it gives upside to the surviving companies that aren't heavily indebted. The worst case scenario right now is that you have a company with a lot of debt that gets smoked. Like I was actually looking at Supermicro this morning. They don't have that much debt. If you go look at the debt over at Supermicro, their payables did explode, but they've got essentially the cash and accounts receivables to cover their debt. And then, of course, they've got some convertible debt here. The bigger problem with a company like Supermicro is their gross profit margin almost halved. Like, how does your gross profit go from 11.8% to just 6.3%? That's insane. So you have this massive compression over here. We did a big analysis on Enphase as well this morning in the Alpha membership, which remember, you can always join that at meetkevin.com. And then you get all of our fundamental analysis, and you can, go in the stock tab of the app and look at historical analysis. Wow, Oracle now down another 6%. What's really remarkable here is this company is now, look at this. You're at 144 divided by 344 You're now down almost 60% on Oracle stock. Let's grab Oracle really quick. Oracle investor relations. Let's just go look at their debt exposure, because this is quite the sell down on the stock. And raising money, more money in this environment, I don't think there's much of a capacity for it. But let's go grab the December 11th. So this is going to be the 12/11/2025. This is the Oracle 10Q earnings statement. We won't, it's pretty boring to look at financial statements, so we won't be in there for very long. I always try to keep it pretty simple when I'm on a live stream. Let's take a look here. So I've got cash of $19.2 billion, right? So that's my cash right now. What bills do I have to pay? We're going to add back in deferreds right here, right? So you always add back in those deferreds, unless the company goes bankrupt. That's when those become refundable, basically, right? And that becomes a problem. So I have $27 billion of debt, and I have 19.2 of cash, which really suggests I'm upside down by about 10 bill, right? But that's not so much the concern, because they're raising money now. They're issuing $20 billion of shares. They're raising money. So what do we have over here? Current payable. Look, these are the long-term debts. Okay, I've got $100 billion of debt over here. I've got $11 billion over here. Lease liabilities, I'm less worried about those, and I've got another $9 billion of debt over here. So I've got about $120 billion of non-lease debt. This is a lot of debt. I mean, you want to see a debt statement. Watch this. If I go down to the debt statement where they show you like their outstanding debt, it's pages long. Like I don't know that I've seen one that long before. I had to find the damn thing. It might be in the 10K. I don't know if it's in this, but wherever it is, where they list their outstanding debts, it's probably in the annual report, where they list their outstanding debts. It's like a chapter book. And I mean, it doesn't matter. Like it's all related to those net total numbers that I just showed you. I just think it's interesting when you look at it, because when you look at it, it's like, oh wow, yeah, that is crazy. And I think it's something cool to see. But you can see all of their maturities for all their debt. You can do this with MicroStrategy as well, and there it is. Look at this chapter book. Look at this. Notes payable. Bro, imagine like going to your CPA and being like, your CPA is like, yo, go ahead and list your debts, please. And then you have to list all of these debts out. Look at this. This is crazy. I mean, like some of them are long-term, right? Which is nice. And you're going out to 2050 on some of these because you're doing these 20, 30-year notes. But I mean, this is insane. And they're just adding to it, right? It's kind of wild. So, that's the broader concern that people have. And now when the banks are starting to say, oh, we want to offload to private credit, and private credit's like, we don't have any money to take. Oh, crap. Well, what a surprise. The market now on Oracle is down 6%. We've got Palantir dropping even more, down 14% now. AMD, $200. Holy smokes. Pretty sure that's what I had in my alpha report this morning. Let's see here. Where is it? I just want, I like looking just so I could see what I said compared to what happened, because it just helps everybody learn too. Okay, where was it? Oh yeah, here it is. Okay, so I wrote this morning. This was yesterday. Palantir selling off would be a warning. Tesla back to 414. That's exactly what happened. ADP, well, worse than expected. Worse claims, blah, blah, blah. Where is the part? What do we need today? Oh, here we go. If AMD falls even more and loses $200, something is quite wrong. Institutions have flipped. Watch for an AMD sell-off at the open, because that brings down the Qs. Wild. Okay, and then where's crypto right now? Look at this. This is crazy. We're now sitting at, this is the 1 minute chart. It looks like this is really accelerated within the last, it's been about the last 3 hours. So since market open was 9:30 right here. This was market open. We went from 74.6 to now 72. We're about to lose 72. We're going to be in the 60s soon. Let's see what CoinGlass has on liquidations. CoinGlass liquidations. But yeah, anyway, if you want to join the Meet Kevin membership, remember that's at meetkevin.com, and the real estate AI is at househack.com or reinvest.com. People keep asking me like, what's Reinvest? It's what we're going to brand HouseHack to over the long term. It's the same company. Okay, so 24-hour wreckage here. I've got $359 billion in Bitcoin, 324 in Ethereum. How is Ethereum doing? Is Ethereum still above 2K? Because poor Tom Lee is just getting killed right now. We've got, wow, just under 2,100 right now. Wow, what a shocker, huh? Holy smokes. 2,100. What's Tom Lee's cost basis these days? I think he's got to be down like 50%. Oh man. Tom Lee. Let's see here. You know, he blocked me because I'm too blunt about him, but that's okay. So this is what people are saying on X right now, that this is his P&L right now. So total invested $16 billion. And down currently about 7.1, probably more today because this was yesterday. So it's probably even worse right now. Holy smokes. I mean, I don't really care about Tom Lee. I feel more bad for the people that, you know, blindly follow Tom Lee into these investments. You know, like I like to try to be really rational with investments. You know, it's like I'll give you an example. Like, I actually think Netflix is a fantastic company, but I've been saying that this downtrend is showing no signs of stopping. We just broke into the oversold territory, but we can actually extend way lower than that. I mean, if you look at 2022, RSI got down to 17, right? And if you look back, that's probably some of the worst. You go back in history, those are some of the lowest relative strengths on a weekly basis. I like using the weekly basis. And, you know, I think that Netflix is a really good long-term buy. But the problem is, if you buy it now, and I've been saying this, if you buy it now, it's probably going to go down more. You know, but Tom Lee's not going to tell you that. And that's, I think, the part that's missing, is you don't have advisors who are willing to tell you, listen, we could go into a 10-year recession. Donald Trump is going to look like a clown. You could lose your job. Don't get wiped out in this down cycle, right? Invest what you're willing not to look at for 10 years. You know, then you get Tom Lee. Ethereum's going to 7,000 in January. Come on, man. That's like, you should be sued for that. Yeah, it's crazy. Whatever. So anyway, Qs are now down. We're about to lose 600. 595, I think, is our next stop. Yeah, 595 is our next stop. We'll probably get a recovery here at some point. Usually, you know, when we get sell-offs like midday, we usually end up recovering. Like, you get to like this peak sell-off, peak margin calls, and then you get some kind of recovery. So, you know, it would seem odd for this to continue to nosedive like this. That would be, an AMD losing 200 would be really bad. And it's losing 200 right now. I hope it doesn't close under 200, because that's a sign that institutions are giving up, which is not good. Not good. So 200 AMD is really the only thing that's held Nvidia up, in my opinion. Nvidia has been range bound because AMD had its pop, but then got stuck. That's been sort of my thesis. I kind of look at these things in pairs. Sometimes I can't articulate that logic as well as maybe I should. But that's my headspace, that AMD dropping 200 is bearish for this range for Nvidia as well. But again, I hope that we could just bottom out here and recover and recover into the close of the day. Like, if I was a day trader, I would be potentially looking for, 5 minutes of uptrend. I get 5 minutes of uptrend, some call options towards the end of the day. Hope we get some kind of recovery. Holding 607 would be great. I don't know if we're gonna get it. I mean, this is an intense washout right now that's happening. If I go jump into, let's see what the doomers have for us. Let's see here. Bassett, we always support a strong dollar. Yeah, whatever. Oh, how's the bond market? Because the bond market also snuffs some of this out. The bond market generally gives you its heads up via the yield curve. Yeah. Yeah. So remember, 125 is you're in a recession, right? So we have been trending towards this, and a lot of people, I get it. They've been frustrated by my comments that you should be cautious. That caution, in fairness, started a little early. I got cautious around September, probably August, July, right around here, right around the yield curve going across zero. So that was a little early, a little cautious over here. And so I admit this was early, but it's not uncommon for me to come early with these thoughts. And then the labor market's obviously been a big concern, but we've seen this sort of just gradual rising here on the 10-2 yield curve. It's really not until 125 that you're in a recession, but by then it's too late. You can't sell at 125. And I'm not going to sell any of the stocks that I have exposure to. Like, I've already done that. I sold Nvidia between, probably average was like 195 is when I sold Nvidia. I told everybody in the Alpha report I would send out alerts when I sell Nvidia. And I sold some at like 205. I sold some at 195, some at 185, whatever. It was kind of spread out in that range because I was selling a little bit at a time. But that's when I started also becoming, that was in like October. I started becoming bearish on hardware because I do think that cycle is unfortunately topping out because the debt is starting to get constrained. And we're seeing that now if you jump over to these Bloomberg pieces, or sorry, the banks trying to get new people for loans over here on hardware. Not great. This is a red flag. So that's why I was sending these alerts like, hey, I'm selling Nvidia. I think the big stretch is over for it, and we're getting to late cycle in hardware. And getting tapped out on financing is just adding insult to injury right now. Again, why, and I say it not to pitch, but I realize I probably went debt free. Me personally, debt free around October of this year. Right around here. And then the company itself hasn't taken on any bank debt. But the reason we haven't is because I've been so uncertain about, this is definitely going to be a soft landing. I'm still sitting at like a 5.3 on the bear bull scale. Again, that's not arguing, we're definitely going into the toilet. I do think some of this software sell-off is overdone. And I mentioned that this morning as well. I'm like, I do think there are going to be some glorious opportunities to buy software cheap. But unfortunately, sometimes markets, as we like to say, they can stay irrational for longer than you can remain solvent. So you have to be careful YOLOing into debt for some of these. Again, I maintain that this is a ridiculous opportunity on Intuit. But, things could get worse. I mean, if I go to the week chart on this, we're in oversold. Oversold on Intuit has not happened since the summer of 2022 on the week chart. So these sell downs are quite remarkable. Let's go to Salesforce. Salesforce has been at these levels before. What about Snowflake? Snowflake has been at these levels before. How about Palantir? See, Palantir's not even oversold yet on the week chart. Palantir's down 13% right now, and we're sitting on a relative strength index at 39. 30 is your threshold for oversold. We're actually building another. This is sort of a side project that we have. We're building an AI sort of version of the Alpha report, not to integrate with the Alpha report, to be a separate thing, but basically, a tool that you could utilize to find these reversals more easily and to sort of give you push notifications when the reversals happen on the weekly RSIs. The weekly RSIs are I feel like my bread and butter for those reversals, but yeah. Okay, cool. Let's keep going to look at what we have from Oracle again. This was let's see, Oracle. We saw that. Okay, what do we have over here? Russian spycraft. Then you got Russian drama. European security officials believe 2 Russian space vehicles have intercepted the communications of at least a dozen satellites over the continent. Okay, so it's intercepting the comms, not exactly the actual what's it called? Satellites. So it's not like they're attacking the actual satellites. They're just trying to potentially put themselves in the way and then capture the data. But I'm surprised though, because this data should be encrypted. So if they're sending non-encrypted data, well, then anybody can intercept it, right? So I wonder if these low Earth satellites encrypt data. Low Earth satellites frequently encrypt data. However, encryption is not universal. Are you kidding me? Oh my gosh, look at this. 50% of satellite data, including some government and military traffic, has been found unencrypted, leaving them vulnerable to interception. Come on, dude. That's like the dumbest thing I've ever heard, dude. That's so dumb. Why would you not encrypt government and military satellite data? And then anybody with a radio can listen to it. That seems dumb. I mean, I have multiple radios on my desk, and like, here's you can't really see it. I don't think you can see it. I have this, I have an encrypted radio right here. Can you see it? It's never going to focus on that, is it? Oh yeah, there you go. I've got an encrypted radio right here, hardwired on my desk. And, you know, good luck listening to that. So it ain't going to happen. Like, you know, if I can encrypt, the government certainly should be able to. Oh, I think it's hilarious. Okay, so let's try the journal. Okay, so the journal. So that was Russia. This is stupid. What is this? Oh yeah, here we go. Let's go look at this. We've got somebody writes Nike is up. Is that true? Let me see here. Tesla under 400. What we got here? So Nike's been on its frustrating downtrend here. Invest in communications and security companies. Yeah, no kidding. What do you like, Cloudflare or what? How's Cloudflare doing? Let's try net. Gov is lazy. There's a video of a YouTube guy intercepting data. Wow. Send that over. That camera quality is good. This camera, I actually do like it a lot. This is a, I think this is a 1.2 focal. I don't use this angle a lot, honestly. This is 1.2. Yeah. So that's how you get the, you know, the crazy bokeh in the background. And you know, what are we streaming at right now? I think I'm pretty sure I'm bottlenecked at 4K, but that's okay. Sorry, 4K. I'm bottlenecked at 1080. But anyway, so okay, we're getting a little bit of a recovery here on the Qs. No, that's one candlestick. Let me go to unaveraged for a moment. 2 candlesticks. 2 candlesticks unaveraged. All right, we'll watch it. But let's keep going here, or we'll come back to it rather. What's this reading the runes on Warsh? Kevin Warsh going to be an inflation hawk or Donald Trump's poodle? Poodles! Russia is watching you. yeah, maybe. Yeah, I don't care where you're from. Yeah, you know, it's just gonna add value to the world. Okay. Oh, cool. We just got another after Matterport done. That's cool. I always find that very exciting. These, what's it called? 3D scans are so cool. Okay, so let's see here. He's more of a pronounced bouquet, fuzzy in Japanese. Oh, that's interesting. I didn't know that. That's a Japanese lens, after all. Okay, so but his recent statements on inflation outlook suggest the latter. Right, exactly. His recent commentary suggests he's going to try to come in there and just dump rates. Let's see here. Warsh's words indicate he's very much the hard money central banker. Speech given in 2010, when the economy was still struggling with the recessionary aftermath, he already started worrying about the Fed credibility. He made 4 main points. First, the Fed independence applies not only to monetary policy, or applies only to monetary policy, not regulatory policy. Second, the Fed as a first responder must resist the temptation to be the ultimate rescuer. Yeah, that's good and bad, right? So it's good because it means maybe the Federal Reserve won't print money like always. And frankly, distort the reality of how an economic cycle should go. However, it's bad because if you have somebody like this who ends up burning the what's it called? The entire economy into depression, then you ask yourself, well, what's the lesser of two evils, right? Somebody's asking about bond yields. Well, let's look at the 2-year really quickly if we're seeing any flight to safety. So 2-year is really going to be a proxy for rate cuts. So the 2-year right now is down 1.7 basis points and the 10-year is flat. Wow, that's interesting. More people fleeing into the 2-year. People often flee into the 2-year as a safety tool. So you look at the 10-year as concerns over long-term inflation and budget deficits, and the 2-year as concerns over near-term policy. So ADP comes in weak, the 2-year goes down because they think the Fed might be more likely to cut rates on weak jobs data. 10-year stays high because they're worried about inflation. That's just sort of like the bond market analysis. But as those two things diverge, right? As the 2-year gets bought under fears that rate cuts are coming, and the 10-year stays high because of inflation, there's this belief in the bond market that the further that spreads, the more likely you're in a recession or going into a recession, because obviously in a recession, rates are going to come down, but that's going to lead to more debt. So that's how you get that divergence. Now, once you're actually in a recession, usually what happens is you get that divergence. That's how you get the 10-2 yield spread. But both of the yields go down. And that's why, some people make recessionary bets. I've made them in the past too. It's just hard to time. You make a recessionary bet on like TLT, for example, because TLT, when and if the economy goes into recession, the 10-year also gets bought as a flight to safety, and both of them get bought. The 2 just gets bought a little more. Problem is, with Donald Trump's inflationary policies, TLT has been a horribly performing asset. It's mostly sideways, so it depends on how you were exposed to it. But the reason it's been so stuck is because this is the market telling you we're not convinced that inflation is going to be solved. And so it just can't get out of the shelf, if you will. You look at what happened during COVID, TLT exploded because of recessionary money printing and this actual flight to safety. Well, that's kind of interesting. Q's now actively recovering, which is good. So we've got more recovery here. This is on the average. I now have 6 green candlesticks. This is positive for potentially getting a rebound back to 607 by the end of the day. It's not unusual. You get those liquidations, you get the panic during the morning, and then things kind of recover a little bit towards the end of the day. The broader trend, unfortunately, right now is still somewhat down, which isn't great. But anyway, I've got Bitcoin. Let's see here. Bitcoin at 72.1 is where we just had a little 1-minute chart double bottom. Cloudflare's also down on a day like today. Actually, look at the discount you're getting on Cloudflare right now. Let's go look at the valuation of Cloudflare, because this is a great company that I don't think is going anywhere. I love Cloudflare, and shout out to anybody associated with Cloudflare. But their valuation has been very high. It's been hard to justify buying them. I can't get my iPad to turn on. It's fine. Oh, did I do it? This iPad's so bugged out. Oh, there we go. Okay, good. It's like turning Siri on and everything. Right? Okay, so if I go to net, it was a 5 peg, right? So here's some of my notes on it. I wrote the following on Cloudflare. Wall Street estimates a 32% average growth rate over the next 4 years. That's a 5 peg. They're heading towards the conversion of their 2026 notes, so you're going to get some dilution coming. They have plenty of cash either way in case they have to pay off that debt. I'm not bearish, but the market is going to punish, see, look at this. If there's a market hiccup in early 2026, they have to pay cash for the convertibles. The market might punish that. They'll still have cash available, but I'll watch for a discount. Momentum is too hot. This was at the end of the year. Valuation sucks. Pricing power is good, and the balance sheet is great. And so now if you look over here, you actually see the stock is trading down quite a chunk here now. You're at currently trading for 163 divided by 260. You're trading down about 38% from highs. What I showed you just now, by the way, that's the stock tab that all the Alpha course members have access to. So you can kind of just like pick on the side, hey, I want to see Kevin's analysis, and then you pick kind of a stock on the side. none of this is like AI driven. This is just me kind of analyzing stocks. And so we get the tickers and stuff, and you can kind of pick and see the historical stuff that I've said about a stock or whatever. Those are a lot of windows. Let me close some of these windows. Oh, it's a mess, huh? Let's see here. Then we've got, let's close this. I don't need Photoshop open. They're going down anyway. Okay. So now let's see what the doomers have. So Doombugger will actually look in a couple different places for the doomers. Let me see what they're saying in the background. So in the background, it says the dollar's bounce looks durable as capitulation fades. Stock sell-off worsens on report of plans for Iran talks collapsing, per Axios. Oh. And then, is this just a rotation or something more profound? Yeah, well, that's why AMD going under 200 is a problem. Software meltdown is a big drag for the leveraged loan market. Private credit, yeah. CLOs, private credit, arcane investments, all bad. Somebody says 617 on the queues tomorrow. I have a couple calls. It's hard to say. I don't like making midday predictions. I always like to make my predictions right before market open. I found that this is just my personal finding of my own trading. I find that my trading is much more on point at the beginning of the day, right here in this moment, rather than during the middle of the day. Mostly because, I think the psychology is that a lot of people are looking for trades at the beginning of the day, and fewer people are looking for trades during the middle of the day. So there's less momentum that compounds during the middle of the day. So it's harder to initiate trades in the middle of the day. Okay, what was I going to look at? Oh, Axios. Yeah, Axios. Plans for Iran nuclear talks are collapsing. Well, that's not great. Okay, hold on a second. We've got some crypto scammer that subscribed to the channel and apparently is now spamming crypto trash. So that, you know what that means? We are going to have to go to turning off poverty chat. Blame the crypto scammer. Poverty chat's going away. It was nice chatting with y'all. All right, it's all right. Well, you can blame the fraudsters. Yeah, it's got to be a sad life when you have to steal from people to make a living. All right, so plans for Iran nuclear talks are collapsing. The U.S. told Iran on Wednesday that it will not agree to Tehran's demands to change the location and format of planned talks. Why does it matter where the talks are? The standoff could block the diplomatic path and convince Trump to opt for military action. U.S. and Iran had agreed to meet in Istanbul, but Iranians said on Tuesday that they wanted to move the talks to Oman and hold them in a bilateral format. U.S. officials considered the request to change, but decided to reject it. Okay. We told them it is this or nothing, and they said, okay, then nothing. Uh-oh. See, people dig in their heels in negotiations, and it just gets dirty really fast, Oh, here's somebody actually talking about opportunities in software. Let me listen for a moment.
Of the model.
But when you look at specifically with Snowflake and Mongo, they're not seat-based prices. They're consumption-based prices. So as people are using more data and touching more data, their revenue is going to grow. And we think both those companies have big advantages in this new world. So
what about IoT?
So IoT is a slightly different story. They are in the market of doing fleet management, telematics, those sort of things. But what their real advantage is they're embedded in these businesses that need their technical help. When you think of where agentic technology is happening and where it's going, it's not going to be impacting the people that are running a fleet of petroleum trucks or that are doing asset management for tagging of generators in the field. IoT, Samsara has done a huge amount of work about building AI functionality into their core product so that they can go to these businesses and help with predictive maintenance or safety training and things like that. And that actually for them is going to allow them to upsell and cross-sell into this installed base at a much faster rate than we would have thought of before.
I want to ask you, and I don't know if you can answer it, but maybe you can answer it broadly, or you can be specific, whatever you want. What about the likes of Salesforce, just to pick the elephant in the room, down on a 5-year basis since entering Dow? And yet, if you look into next year, it looks like it's still going to have 9% revenue growth, similar to last year, 34% operating margin, perhaps. And this stock has been cut in half over the past 15 months, and the multiple's down 20 points.
Yeah, exactly. So the application space in general is at the focus of this storm as people begin to wonder about, what's the value of a systems of record company and how much can this be replaced. We think it's really important, first of all, for investors to be positioned correctly across that entire space and not be making a massive bet one way or another across applications because it is so uncertain right now.
So you think, in other words, there's a legitimate case to be made that a company like Salesforce,
So I don't want to talk about Salesforce specifically in this instance, but what I would just say is that the bear narrative is that the long-term annuity value of an applications company might be not as big as we thought it was. I personally think it is.
So basically, the risk premium goes up. And he has a point. He has this point of saying, like, be careful being too bullish, right? And having too much. I think that's fair. I think there's a buy the dip opportunity. You know what? F it. Let's buy the dip right now. I'm going to buy the dip right now. Let's go. And we're going to go for, what am I going to do? Go buy the dip over here. Okay. Buy. And just a little bit. I'm going to buy like 20 grand. How's that sound? 22,000 bucks. Fine. Works for me. Buy. All right. Perfect. I'll send what I bought in our little alerts thingy. Just went through. All right, let me send that, and then let's listen in again for a moment here.
You've got exposure to some of the semi and chip space. You've got KLA, you've got AMAT.
Yeah.
Are you sticking with those two? Is there anything going on here that worries you?
So, we feel really comfortable about this infrastructure build out, even more comfortable than we are about the application space, frankly. Every time we talk with the CFOs and the CEOs of the big frontier model companies, their commitment to spending on this build out only goes up. So the backdrop there is, it's almost the inverse of software, where there isn't a question about, is this getting replaced? It's a question of how much and how fast is the build going to happen. What we're looking for there then is, where are their key capacity constraints? One of them right now is in the actual build out of manufacturing capacity for semis. That benefits SemiCap greatly. You're seeing incredible tightness across memory, and in terms of, the logic chips that are happening. We think that you're going to, as you move through 26 and into 27, you're going to see an acceleration of equipment build outs into the clean rooms that are getting built. So that sets up a really nice backdrop.
The clean rooms.
Yeah.
And then when you think about the core microprocessor companies, again, we think
Musk wants dirty rooms.
When you look at AMD's number,
that's the rumor.
Down is, there was a little bit of noise around their China revenue, and there was some concerns about this year's growth of the data center business. We don't think either one of those is a durable question from our mind. So if you have a long horizon and you understand kind of what you think the opportunity is, we think there's a great opportunity in a company like AMD.
All right, Brooke, it's been great to have you. Really appreciate your time today, Brooke. I should mention you also like DoorDash, Meta, Texas Instruments, so you're kind of up and down in terms of size. But I guess my quick final question, as the broad one for the market, is, in a year when so far the dividend stocks are leading the way, there's this defensive tilt, even with the ISM outperforming, maybe that's part of this broadening trend.
Yeah.
How does it feel being in the highly concentrated tech space? Do you think this is just a necessary shakeout?
So, first of all, within tech, there's so much opportunity to make money in lots of different stocks that Texas Instruments is not an AI play. Texas Instruments is being driven by the recovery in broad-based industrial spending. They're doing a really interesting acquisition today. There's lots of reasons where you can find great opportunities around AI. But investors need to remember, AI is the thing. This is the biggest trend we're going to see for the next decade. It's going to impact massive parts of the economy. And you need to be front-footed about how you address that and where you see the opportunities.
It's kind of fun unless you're in a name down, 20% in the week. Brooke, really appreciate your time. Brooke,
thanks for your time.
With Goldman Sachs. Speaking of which, another name that's been hit hard by these new AI tools is LegalZoom. The shares are off 17% since Monday after Anthropic announced its entry into the legal tech space yesterday. But the CEO tells us the new technology is actually a massive accelerant for his company and for Main Street. And he says this will effectively expand the market. Joining us now now is LegalZoom CEO Jeff Steibel. Jeff, it's great to have you here. Welcome.
Thank you, Kelly. Appreciate it.
What was going through your mind yesterday?
I mean, the usual thoughts when your stock drops for no good reason, especially when our company, frankly, is a beneficiary and quite excited about what's...
Dude, LegalZoom. Oh, come on, dude. Of course you're going to drop from AI.
Involved and engaged, particularly in our space, because it means we can do more to automate the technology that we know will be automated and displaced, and then focus on the human in a loop aspect that we've been building out over the last couple of years that we think will be the driver for us in the long run.
But tell me about Harvey. As I understand it, there are actually a number of legal, call them AI tools in the space that are experiencing some adoption. So what's the differentiation between these new models that are going to get so much buzz and the market position that you think you're in?
Sure. And it really is a very different position between what a Harvey does and, frankly, what Anthropic...
All right, I don't really care about this LegalZoom today. Somebody here, Taylor donates $5 to say, I'm having a hard time reconciling how investors can say SaaS is dead because of AI, but the AI trade is a bubble. Seems like the truth is in the middle. It's actually really interesting that you say that. I'll show you something that I wrote in our alpha commentary this morning. And I'll just show a part. I'm not trying to give away everything that I talk about in the live streams in the morning. But look what I wrote this morning, literally in the alpha market commentary. Both cannot be true. AI kills all software. AI hardware is a bubble. Both cannot be true. So yeah, that's interesting to me. So anyway, all right, good. So let's see here. Then we have, let's go to, oh, look at that crypto rebound right here. Look at that. Alan says, I bought the dip yesterday, same price you just bought. Oh, let's go. So look at this. Yeah, so you've got Bitcoin 73 returning by about $900 there off the bottom. The Qs are still struggling to hold up, honestly. You've got Nvidia struggle bus over here. Wow. Disney, AMD. Oh, you recovered 200 there for a moment. Wow. That's good. That's really important. What about Tesla? How's Tesla holding up? Tesla. Oh, wow. Went to $399 there for a moment, huh? Some people got to buy with a 3 in the front. That's cool. That's cool. Did I buy Tesla? No, I didn't buy Tesla. All right. So let's see here. Oh, Chinese readout from their talk with Trump. What is this? China must safeguard its own sovereignty. We will never allow Taiwan to be separated. The U.S. must handle the issue of arms sales to Taiwan with prudence. Would like to work together on bilateral ties, blah, blah, blah. So it's kind of like, we want to work with you. We're going to say things are good, but you guys got to be careful sending weapons to Taiwan. Interesting. Interesting. Okay. What else? Okay. So now, somebody writes here, I got a cease and desist from Binance. I really want to expose everything I was told from credible resources, but I can't risk the legal battle. Notice the cease and desist. This letter serves as a formal demand to immediately cease and desist from disseminating false and defamatory statements regarding Binance. On February 3rd, you posted on X that Binance is insolvent, responsible for 1010, and the situation is far worse than the FTX collapse. These claims are demonstrably false, malicious, and constitute libel. Okay, so slander, basically. Permanently delete, post a content retraction, cease all future disparagement. Wow. Looks like, and this is what he wrote, looks like the truth is unfolding and the truth is coming out. Binance is insolvent and they're solely responsible for 1010. The effect it's having on the market is catastrophic. If the news I just received is real, we are totally screwed. But I mean, it doesn't look like he's provided any insights. I hate to feel like this guy, but People making six figures just for streaming. CZ scam pumping up hyperliquid competitor or CZ scam. Multiple airdrops coming. People are saying we're just getting started. ETH at 4,500, sold back at 250. Yeah, that's kind of up there, huh? In terms of the numbers. What do I think about Symbiotic earnings? I haven't looked at Symbiotic. I should do that. Going live tonight to show all the receipts from reliable sources. Well, it looks like they wanted to stop that live stream, huh? And quickly set a cease and desist. Yeah, interesting. All right, so let's go back to... Yeah, we're still on that uptrend here. Tesla's still on that uptrend. The Qs are trying, but boy, what a struggle to get this to move. Look at Snowflake down another 7%. Shocking. Okay, let's go to the Iran deal again here. Yeah, Michael Burry took, I feel like, my spreadsheet and went a little bit more extreme. So I've been talking about when did I make this? I made a Bitcoin losses spreadsheet. I made this in early December. So this is from early December. I made a Bitcoin losses spreadsheet. And we estimated that the current value at $85,000, how much these companies would have to indicate in losses. So I suppose what we could do is we could now update this for... a Feb 4 update, and we could go in here and where's the math? Oh, do I not have this as a formula? That'd be annoying. Oh, I think I calculated this on a different sheet and copied it over. Oh, that's a bummer. All right, well, what I could do is I could magnify. Well, but you have to really base off what the loss is from Jan 1, right? So what you have to do is you have to look at what the Jan 1 value is of Bitcoin, because they report the loss quarterly, right? So if I go to Jan 1 for Bitcoin, let's see here. Jan 1, well, December 31st. December 31st closing price was 87,964. 87,964, 87,964, 87,964. So Jan 1 value, 8,7,964. Okay. So Jan 1 value. Come on. Jan 1 value. I think this computer is starting to die. It just seizes up. Okay. Now we're going to go. Where's Steve to tell me I need a Mac? Or a Dell, rather. So the Jan 1 value, we're going to go multiply the outstanding Bitcoin, although they've bought more, so this is a little dated. Oh, I guess I could just put this here. That's fine. That would work. Okay, that's the Jan 1 value. And then the Feb 4 value at 70, I'll be generous, I'll call it $73,000, right? Would be this times 73. And then this would be the loss, approximate loss since Jan 1 through Feb 4. This is going to be a formula of this minus this equals, there we go. And now I should be able to just take all of these and copy paste down. Look at that. Here we go. Fact check really quick. We've got 53,000 times 87,964 is 46. Yep. Okay, perfect. Good. The value's dropped quite a bit. So these are the losses. So for example, MicroStrategy is going to have to report $10 billion in losses if it stays at these prices, right? That's another $10 billion of losses. If I go to Coinbase, they've got another $217 billion of losses. Tesla has another $172 million in losses just from crypto. If it stays this way. I've got GameStop over here at $70 million. And their last income was boosted up. That was their Q3 income. That was boosted up by Bitcoin gains. Now you've got the opposite. So yeah, I mean, who knows? Maybe Michael Burry subscribes to the channel because we've been talking about that for a little bit. So anyway, yeah. Okay, somebody, what's this? Do you think we're in the bottoms, and when do you think you buy heavy? I mean, the time to really buy heavy when you go out on margin and go buy heavy is when you're in a recession, right? But then nobody has money. So, but, I don't think it's a foregone conclusion that we're going to go into a recession. So I bought a little bit of the dip. I mean, you saw I bought $22,000 or whatever of a dip just now. To me, I think that's just a conservative little nibble on a stock that I'm confident is going to get eradicated from AI, and I think there's a great opportunity in. But anyway, could be wrong. Sim. Let's take a look at Sim. Wow, Sim's down 7. Sim really has had a lot of trouble staying above 64. That's been the challenge for Symbotic. Is it can't stay above 64. Walmart is a big a purchaser of their product, and Walmart is just. I mean, this isn't like almost like the flight to safety recession stock right now. It's really incredible. But the valuation of Target relative to, of Walmart relative to Target is just insane. It's insane. Regarding Tesla, I'll watch my Tesla video. Based on how BTC has performed in the past, it's probably going to go down until October, maybe April at the soonest. Not looking at it again until the 54 to 47K range. Somebody else here writes, what about the SCOTUS and tariff ruling? Well, I mean, that's actually bullish for the stock market in the long term, that we are likely to lose the IEEPA tariffs. However, that will create uncertainty in the short term. Hence this potential, Q1 drama that's occurring right now. I mean, this is quite painful for a lot of people. You're going to see an eradication of just capital, basically. It's one of the reasons why I really like right now how much, like, looking at the real estate we have. We've got almost $70 million of real estate that we've renovated and turned into beautiful homes, and so that's why I like I actually think real estate is a perfect tool to have exposure for, to just sort of minimize that what's it called, volatility in the stock market. Real estate hasn't moved to the downside like stocks have just recently removed. What is this? Redfin. Let's go to the data center. Redfin data center. Download housing market data. Let's just look here. So let's go to let's go look at Austin, Texas. See if they've recovered. So Austin, Texas, median sales prices coming in comparison. See, Austin's somewhat stabilized, which is actually a good sign. Austin really topped out in 2022, which they don't even show 2022 anymore. But you can see it's certainly lower than it was in 2023. But you're starting to converge over here in Austin. So Austin is finding a bottom, which is great. Let's see how San Francisco is doing. San Francisco is at highs. So San Francisco's up. San Diego is up. Here's the green. I should be looking on this side. I'm looking at the end of last year. They're up. But the green is up as well. Let's try Miami, Florida. Miami is a little lower. Nope, sorry, there's 2026. Miami's up as well. So, real estate relatively stable right now. And I mean, this is not a real estate cycle. Or cyclical crash for real estate. This is an AI problem, and real estate had its cycle in 2008. We're nowhere near, in my opinion, a debt bubble in real estate. If anything, equity positions in real estate are very, very resilient. Somebody left me a comment the other day. They're like, but Kevin, you said take out HELOCs at the same time as you said don't take on debt. I think people misunderstood when I said that. I'd like to just clarify. I think it's a good idea to open a HELOC and don't use the debt, because then you have it as available. So if you go into a recession, then you have the piggy bank ready to go. So yeah, that's fun. How many properties HouseHack? We're coming up on 100 doors, which is kind of cool. So we'll have to do something special when we hit 100, but we might not hit 100. I mean, we might build our way to 100, honestly, because I don't like buying outside of Q3, Q4. But we've got a lot of development in the pipeline. Just what we're developing, we'll probably add 8 plus maybe 4 or 5 over there, plus maybe 3 we'll probably add about 16 units, over the next year to 2 years. That's just in build stuff that we're actually developing. So we're also creating housing, right? That's why I always think HouseHack is so interesting, because it's like, hey, we buy fixer-uppers, we buy and place tenants after we fix them up, right? We also develop real estate. But in addition to developing real estate, not just ADUs or new apartment buildings or land, we have a little bit of land as well, pretty diversified. Then we're also doing software. So I'm personally just very excited about it all. Look at this. You are getting this turn up right here. Hopefully we could keep going up towards 607. It really started around 1250 right here. It looks like we maxed out on sellers, and we're slowly getting some of that buy the dip, which is quite exciting. Just for, the SEC that's watching, remember there's risk with every investment. Read the offering circular before investing. 5% yield is paid through conversion. You get paid monthly, whatever. It's really, we're paying out mostly just our rents. Okay, Tom Lee is responsible for billions in pleb losses in Bitcoin and ETH, but is a genius in bull markets when all ships rise the tide. Fundstrat do better. Am I still blocked? Hey! This is honestly an honor. Is that an ad? Oh yeah, that's an ad. This is kind of an honor to me. Like, I feel like this is like a badge right here. This and Chomspack. Anyway. Yeah, it's interesting. For the all-in people, I feel like, part of me, tell me if I should do this. You know what? I'll make a poll. Tell me if this is a good or a bad idea. We'll do a little poll. So I want to do like teardown videos on the all-in podcast videos, because lately I feel like they've gotten a little politicized. So I was thinking about doing teardown videos on the all-in pod videos. And what's actually kind of funny about that is I'm blocked by 2 of them. I am followed by 1 of them. And I'm not followed or blocked by the 4th one. I got blocked by Chamath for asking why he paper-handed Virgin Galactic after pumping it, which, to me looked like a pump and dump. And then JCal says he wants to slice me to pieces because I shit on his real estate startup that he invested in. He wasn't very happy about that. Should I do tear down videos on all in podcast? Yes. No. All right. I'm running the poll. we'll see what y'all think about that. Anyway, so I think it's comedy. All right. So now, okay. So only popularity central banks should see history books. Last central banks here and abroad worked for decades to get inflation down to levels with price stability. We should not risk those hard-won gains. This is true for price stability. Intellectually, at least today, Warsh appears to be the same as 2010. Yeah, I agree. He does seem like that. Oh, hold on a sec. Let me download this right quick. I'll come right back. Okay, one sec.
Long-term revenue streams for the likes of Salesforce and so on. So this move, Aaron, though, is a historic one. What would you tell investors who are jumping out at these names right now?
Yeah, well, I would rather maybe keep it a little bit more philosophical. So I'd say there's sort of 2 separate categories of the conversation right now. The first is what happens when AI coding allows you to develop, software at a 100th of the cost that you do today. And what happens to maybe the pressure of some of these systems, and do people go and code their own technology for a lot of these use cases? I think for that, it somewhat misunderstands this idea of where companies tend to spend their resources and their time and their energy. And so a company wanting to take on the average company wanted to take on its own project to manage its own ERP system or its own CRM system and take on all of the risk, the liability, the complexity of doing so, even if the cost of developing the software has gone down by quite a bit. I'm less sort of sympathetic to that argument. And, I went back
think
at
that
15
makes a lot of sense. I mean, you gave the example of Ford recently, and I want you to continue the thought. But I think both of us who sit inside companies know they don't just goof off with software. These are their most vital, most important business processes that they have maybe their entire company to understand how they work, and they have to be airtight. And I could see maybe for some startups or people who are a little more sophisticated, I just don't understand how they're going to replace those workflows with something haphazard.
Yeah, correct. And I think from my purview and many peers' purviews, I mean, we've lived in a world of things like open source as an example. There's been open source CRM and ERP systems for decades, and most companies don't run their entire sort of businesses on those because they don't want to take the risk of having to manage those systems themselves. They would rather rely on a vendor that's seen that problem set 10,000 times or 100,000 times, and they've built an ecosystem and they have a set of partners that help you with that. So I do think, though, that when you have 100 times more software getting built, I think that it's actually a positive boon, because what will happen is the software vendors that have access to customers and that are currently managing data or workflows, they're going to increasingly build more functionality for their customers. So I think it's going to cause, any existing vendor that you have within your technology stack to both have to earn their current dollars, but ultimately deliver more and more value for you. And I think that's going to be an incredible time to be buying and using IT systems, because you're going to get more and more value from your software over time, because we're all going to be building way more features. So I think you're going to have more software, you're going to have more functionality, you're going to have more personalization of that. That's the sort of first part of the argument. The second, though, I think is much more exciting, which is in a world of 10 or 100 or 1,000 times more agents using technology than people do, I think the value of who has access to the right data, the workflows that agents are involved in, the guardrails of protecting information and making sure, again, that agents only are working off of the right data. I think the value of these systems of record that are involved in mission critical workflows, I think the value of those systems will go up, because agents are going to need access to all of that information if you want to go and drive any real automation in your organization.
Yeah.
There's an interesting stat that Mike Cannon-Brooks, the CEO of Atlassian, shared, I think, on the last earnings call, which is the customers that they have that are using AI coding agents are growing faster than those that aren't. And so just think about that intuitively for a second. It sort of makes sense. If you are going to go deploy 100 times more coding agents than engineers you have in your organization, how are you going to keep track of what they're working on or what they're doing or the tickets that they either filed or completed? The value of that system of record and the workflow goes up as a result of that. So, I think some of the cognitive dissonance, if you're inside of software, is we're actually seeing the use cases for agents actually explode and then ultimately make these platforms more useful and more valuable.
Yeah, and one side comment Brooke made, is an important one, is that models like Snowflake and like Mongo don't charge per seat. And so if that was a concern, like you said, maybe there's more seats anyway. Quickly, Aaron, with this broader move that we're seeing in kind of tech and a little bit of this panic, is there any word of caution you'd add about what is ultimately driving it? Does it feel to you like something that's based on, Claude comes out, we just spoke to the LegalZoom CEO, they unleash a plugin for this and a plugin for that. And it just, a lot of these industry players, and perhaps you would know better than us, some of these smaller software companies that might not be so vital, wherever they live, maybe they live in the private world, I don't know, but maybe that's where, more of the pain is felt.
I think AI is causing every software company to have to stay on its toes. It is certainly forcing every incumbent to make sure that they are doing more for their customers. I think that's an incredible thing for the market and for IT buyers. But again, from our purview, I'm sure from Salesforce's purview, from Workday's or ServiceNow's, in a world of again, agents running around, working across all of your data sets and your business systems, the ability to ensure that those agents only are working on the right information, that they're involved in workflows that are deterministic, that can sort of stay on the same rails every single time, the ability to make sure that agents have access to the right context. In our world, that means enterprise content. That actually is going to be even more important for agents to be doing the useful work within our organizations. And so we look at something like Claude Cowork, and we're incredibly excited because Box has an MCP connector that connects directly into Claude Cowork, which means if you want to go and ask Claude Cowork to do some data analysis for you or generate a PowerPoint presentation. It's able to access all of the data in Box to be able to go do that work. And so the ability to then control, what does Claude have access to? What people is it able to work with? What data is it able to generate? Those become the really important elements of the future of being able to deploy AI agents. So whether you have a data moat or a workflow moat or a network effect within your software, I think these are going to be very important attributes. But I think the conversation is very healthy. I think we should be having
Sorry about that. I got HVAC problem, and I just had to help them really quick. Okay, that's done. So in the meantime, I was listening to it at the same time, and the guy's talking about whether you have a data flow, a data moat, or a workflow moat. I actually think there are a lot of software companies that have massive workflow moats. So I totally agree with that. A workflow moat would be kind of like, as an example, I'm just going to think of one. Let's say you have, like a lot of people use, what's that mail app called? I hate it, but it's, what's the email app on Microsoft? I don't know, whatever. You got all your crap set up in there. There's like a barrier to leave that, right? Or here's a better example. You use QuickBooks to run payroll for your employees. Everybody knows that setting up payroll is a giant pain in the double ASS. And now, AI can help enhance some of how we run payroll or some of the work that we do. But we really want to go set all that up again? Like, you're already integrated in a flow at a company. It's like, are you going to use Claudebot to go screw it up? No, because they're going to pay the taxes for you. They're going to do the withholdings for you. They'll deal with your tax letters for you. They deal with all that crap for you. That's a moat. Another example, Outlook. Gosh, yeah, Outcooked. Okay, I like that. That's a good one. Outcooked. That's where I think, we have also a data moat in how I do wedge deals, right? Like, I don't think people can take sort of the Kevin brain and just replicate this, because the way we identify deals nationwide, you remember in 2023 and 2024, we flew like 500 hours that year exploring the country and testing sort of our wedge deal model everywhere in the country. Like, those were foundations that we were building back then with this physical intelligence that we think creates this moat that companies in real estate can't compete with. But anyway, my whole point of bringing up that analogy is just to say that I think that person on the show there has a point. I agree with that. Okay, so this is about Warsh, fiscal dominance. So what's persuaded Trump to pick this guy? Warsh has been conveniently concluded that inflation is no longer a threat. Right. So after being an inflation hawk, all of a sudden he's like, oh, guys, it's actually not a problem anymore. Which, frankly, the labor data probably supports more rate cuts. And Treasury yields have remained aggressively high. So let's see. At the same time, U.S. Treasury is likely to shift further towards short-term financing, right? Okay, the result might be another financial crisis. See, look at this. With a more strongly upward-sloping U.S. yield curve, the likely outcome would be greater demand from dollar financing at the short end, right? So more buying on the 2-year, and less demand at the long end. Correct. Yes. Warsh might be too willing to argue for whatever Trump wants. At the same time, Treasury will shift towards short-term financing because rates are high, so that makes sense. But that steepens the yield curve. Given the decline in banks' reserves and financial deregulation as well, the balance sheet of the financial sector would become more fragile. Right. Bank deregulation, which is why everybody wanted Trump. Wow, imagine that. Imagine deregulation causing a crash because you deregulated everything and now people go loony for private credit and AI, and then wow, it's a bubble. The incentive to hold the dollar might fall as short rates decline and fears of inflation jump. The result might be another financial crisis. Correct. Yes, Warsh is a better candidate than many of the others, but he is confusing, perhaps confused. And the U.S. would need a Fed chair who would stand up to Trump. To his credit, Powell has proved to be such a man. Will J. Wow. That's a good article. Who wrote this? This was written by who's this guy? I don't know who wrote it. This old guy. Not that there's anything wrong with being old. Martin Wolf is the chief economics commentator at the Financial Times. Honestly, that was a pretty good piece. I think this is a very level-headed piece. And I agree. Let's take a look at some of the comments. 2 observations. First, this man, much like Martin, who cares deeply about his standing by leading across by Western Tenant. What is this? This to me looks like an AI written thing. I'm not reading your AI slop. Warsh did not get to where he is by being difficult or disagreeable. His own family wealth depends on staying on the right side of his father-in-law, who is a Trump ally. Doesn't that have to do with the, is it Estee Lauder? I think it's Estee Lauder. Kevin Warsh, it's the wife. The wife's dad. So if you go here, yep, look at that. Look at it. Jane Lauder, who is the daughter of Ronald Lauder. Ronald Lauder is the sole heir to Estee Lauder companies. Bah, bah, bah. Man. Hi, Dad. Hello. It's such a grumpy photo. Scary. Anyway, then let's see here. Blah, blah, blah. Okay, these comments are now going off of the rails. Okay, cool. So that was the FT. Let's go back to the Doomers. Let's see what else they have for us. Okay, let me close this poll. I'm going to close this poll in 30 seconds. So if you want to vote, make sure to go check that vote. And then we're going to close it here. Software short sellers mint $24 billion. Well, that's the thing. And they have to cover, right? This is why when you get a big drop like you get today on Palantir or whatever, like at some point you want to take profits. And so that's why you can sometimes get these rebounds. I mean, I don't know. Let's see if it's sustaining. Yeah, it's still sustaining. See that? Still sustaining up on the Qs here. Slowly trying to get back up. Boy, oh boy. But Palantir is still in the toilet. Tesla not as bad as it was before. And Microsoft, Apple, and Walt Disney, ServiceNow, blah, 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 blah. Okay. So not as bad as we had earlier. Let's go take a look over here. Brutal software stocks has rattled investors across Wall Street, provided a boon to those betting against the group. Yeah. $24 billion in paper gains per S3 partners. Wow. Yeah, that's something else. Okay. So software-specific phenomenon, Mag 7 essentially unchanged. I don't know if it's unchanged. You know, Tesla and Nvidia are getting hit. Investors have been punishing software stocks for months about AI potentially hurting, blah, blah, blah. I'm just excited that we get to finally, I mean, I'm glad we did a little extension just to help people out with the, to get in, because there were some people who felt really bad they missed it. We did this little extension on the fundraise for HouseHack, but it's exhausting during the fundraise. So that ends Friday. 2 more days. 2 more days, Kevin. Short interest in Microsoft has jumped 20% for the year, gone up 10% for Oracle. This marks a shift from the typical moves short sellers make at this point in a decline. Wait, what? This marks a shift. Short interest has jumped by 20% this year for Microsoft, 10% for Oracle. Historically, software companies behave like a reversal stock, with shorts covering on the way down. Right. Now, it's trading momentum-driven distressed name with shorts increasing into weakness. Oh, wow. Well, if the short selling continues to get worse, the whole sell-off is going to get worse. You know, there'll be plenty more buy the dip opportunities. Wow, that's crazy. Tesla avoids the AI panic. This is true. Software moguls' fortunes plunged by $62 billion. Will always support a strong dollar. Trump administration, we saw this. Musk's AI startup is a payload SpaceX can't afford. Oh, that's hilarious. I love that line. I want to read this article about SpaceX, but yeah, he's already gutted the Consumer Financial Protection Bureau. This is true. Also, we did get court's rule that he has to fund the CFPB, so I don't know what's going to happen there, but I didn't like that at all.
Both to its flagship coding tool, Next.
Worst possible timing to just go to the bathroom really quickly. I'm dying. All the tea is going through me. I'm going to explode. Speaking of which, I'm going to make some more tea.
One of the real exceptions recently has been the storage stocks with this whole idea of a shortage. The Microns, the SanDisks of the world are falling out of bed today. SanDisk is down 15%, $101. Micron's down 12%, $51. So this is just a broad sell tech situation, it sounds like.
Absolutely. I mean, we've really been seeing SanDisk on a record tear. I mean, 6 straight days of gains to then see a reversal today. I mean, this is a stock that's really been putting up some really great numbers when we think about returns this year. So it's interesting to start to see that pullback, that reversal, not only in SanDisk, but really just a widespread weakness that we're seeing really ricocheting across the tech industry more broadly.
Yeah. All right. Well, let's talk about crypto if we dare. My God, we had a 72 handle on Bitcoin a little while ago. It's off the lows. We're at 73,850, still down 3%. Are these tied together? Because this has been a brutal couple of weeks.
Certainly been a brutal couple of weeks when we take a look at cryptocurrencies, Bitcoin in particular. Bitcoin today hitting its lowest level since 2024. But we're really seeing about so many dollars, almost $1 trillion coming out, $500 billion being wiped out in this week alone when we look at cryptocurrencies more broadly. So this plunge is really just raising a lot of doubts that have already kind of been in the market, but really being underscored right now about whether or not Bitcoin's actually a safe haven, especially when we think about all the geopolitical risks going on in this environment. We've had Michael Burry coming out to talk about it, throwing some cold water on the scenario. We also had Treasury Secretary Scott Bessent earlier talking during a panel at the House panel today, earlier during his testimony, saying that Bitcoin won't get any help from the Treasury. So you're certainly seeing a lot of money coming out of this sector more broadly.
I heard that exchange with Congressman Brad Sherman. Really interesting, Nora. Thank you so much. Nora Melinda is an awfully busy person in New York today, and we thank you, of course. One thing that is moving higher is gold, right? Everyone calls Bitcoin digital gold. Well, actual gold is up just a fraction, $5 an ounce to $49.08. We'll keep tabs on all this for you. We're going to have a lot to talk about in the late edition of Balance of Power once Alphabet reports after the bell. Important happenings, as we promised we'd be looking abroad before this hour was out, and we want to keep tabs on what's happening with Iran, because this seems to be the story that maybe no one's talking about for some reason. We already told you that the carrier strike group had arrived in the region, and you've been hearing some saber rattling along with some promise of diplomacy. And right now, the Secretary of State, Marco Rubio, says he's open to upcoming talks with Iran, knowing that we have a session planned for Friday and that a location is being worked through. Now, he's a diplomat, of course. That's how that works. Take a look at the reporting from Axios. The U.S. just told Iran it will not agree to Tehran's demands to change the location and format of talks planned for Friday. They wanted everybody else out of the room. Just do this between Washington and Tehran. That appears to be not happening. The U.S. and Iran had agreed to meet in Istanbul, with other Middle Eastern countries participating as observers. We've been continuing our conversation with Heather Conley about this, and she's back with us in studio now, non-resident senior fellow at the American Enterprise Institute, the AEI, former Deputy Assistant Secretary of State for the Bureau of European and Eurasian Affairs, a voice of experience that we have drawn on more than once. And Heather, it's great to see you. Welcome back. Is this session happening on Friday?
Okay, very interesting. So, that's Doomberg for you. Let's go look at this from Doomberg. So this is from Tom Black, opinion columnist. What does he say here about SpaceX? SpaceX had a big, I will say, as a SpaceX shareholder in my venture capital fund, we got into the SpaceX valuation, I think, very, decently early. It was like in the 300 billions. I mean, I guess that's not like super early. But now if it's going to IPO at 1.5, that's still pretty damn good. Similar to the other investment we made into Apptronic, that is also, I think they're talking on $5 billion valuation, which is way higher than the one something we were in before. But anyway, as essentially an exposed shareholder here to SpaceX, I personally am bummed about this XAI buy. I don't like this. But anyway, so SpaceX has a big head start on technology, which is drastically lower cost. And I talked about this acquisition in, I think, a video 2 days ago. I talked about how I didn't like this. Just a quick tip, by the way, if you watch my videos, I know sometimes they're long. I try to, on the long ones, put a, little tabby at the bottom and explain, what's going on. So like if you zoom across, you can kind of see. I don't remember where I said that, but somewhere I was talking about SpaceX. Oh yeah, here it is, and SpaceX. Yeah. See? So if you go into this, for example, my Doom Loop video, I talk about Nvidia, private credit, explain the Doom Loop, which I think has a really cool graphic to it. Safety stocks, and then SpaceX. The whole SpaceX section is this whole like extra thing in the back right here. And, I don't know, maybe I should like separate those things, but I don't. Anyway, SpaceX prepares for its huge space Starship rocket to enter commercial service. Nothing could derail the company from its leadership position, except perhaps a truly bad decision to chain a financial anchor around SpaceX's neck. It looks to be the case with XAI. I agree. I'm out of tea. Okay. His cash gulping startup, XAI, the combination, $1.25 billion. Ignore the talk about synergies with space. They don't exist right now. SpaceX has been doing fine at revolutionizing the space industry with the Falcon 9 workhorse rocket. It enabled Musk to build a Starlink constellation of low Earth orbit satellites that provide mobile broadband internet for ships, planes, recreational videos, rural homes, battlefields, blah, 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 blah. Yes. Big fan, by the way, of Starlink and all that. By the way, my Tesla's in service right now, and they're doing some cool stuff to it. Well, they're fixing the fact that it leaks, the tonneau cover, which, that's sad. So they're fixing the leak. But then on top of that, they're putting the off-roading package underneath it, so that's kind of cool. And they're fixing some other crap. So I gotta wait for the dang thing to come back from service. But anyway, then I can reinstall my Starlink on the back. That's where I was going with that. All right, so 165 missions last year. That's like a launch every other day. That's incredible. That was also more than half of global launches. SpaceX is why the U.S. is dominating the space race against China. Oh, that's great. That's very bullish, right? SpaceX makes money charging customers by the ton to carry their payloads into space. But most of its launches were for Starlink last year, which is the main reason that SpaceX is profitable. Right. Totally makes sense. Customers including United Airlines, blah, blah, blah. I love it. I've tried Starlink on planes before, and it's very impressive. I never did get Starlink installed on mine because the FAA certifications just took way too freaking long. And I don't want another phone call from the FAA, okay? I've already had my share of phone calls. Well, I've had 2 phone calls from the FAA. Nothing ever ended up coming out of them. But you don't want to... it's kind of like the cops calling you. I don't want the cops called, I blame Jack for one of them. He didn't wear his shoulder belt. Can you believe that? I had a video of us flying, and the FAA saw that Jack... On my video, the FAA saw that Jack wasn't wearing his shoulder belt. And it's just the lap belt, which most planes just have the lap belt. It's like, oh, you should be wearing a shoulder belt, for takeoff and landing. So now I always joke, I'm like, Jack, if you don't wear a seatbelt, the FAA is going to call daddy again. It's crazy, but they're watching. Good on them, I guess. So another thing that I thought was kind of funny, and you should follow me on Instagram to see this kind of stuff. But this morning, well, this was last night, I was dropping the mail off in my go-kart. There it is. You could watch that on X yourself. But I go to the mail in my go-kart. Look at what we were watching on the way to school here. Or not watching. We were playing Wheels on the Bus. And there they are. That's why I was a little later this morning with the live stream. I had to go drop off the kiddos. But anyway. So, let's see. Flying Starlink. Okay, SpaceX, which produces its own satellites, also makes money. Government contracts, mainly from NASA Defense Department, will likely play a key role in building out the Golden Dome. Oh, yeah. Okay, that's cool. So, let's see here. The reliability looks last year, SpaceX earned a profit of $8 billion, according to Reuters. 50% profit margin is huge, especially for rockets, honestly. That's fantastic, right? So SpaceX just bought up a bunch of wireless spectrum to offer directly to phones, SpaceX or Starlink directly to phones, right? Unless Musk raids the company's cash to finance the startup, that is, or to finance XAI, right? So props to Jack for getting the FAA called on him. That's epic. Yeah, it's like what 10-year-old gets the FAA to call your dad on him. That's a good point. The spending isn't easing up anytime soon. XAI competes with other deep-pocketed tech companies and startups to acquire computer chips and build data centers to house them. We know that. SpaceX has some competitors like Jeff Bezos' Blue Origin's, and I haven't heard of this one, Eutelsat Communications. Competition, the actual AI product faces much more competition. That's true. OpenAI, Anthropic, Meta, Microsoft, Alphabet. Too early to pick winners and losers. The bottom line is XAI needs cash, and Musk is looking at SpaceX as an ATM. This is deja vu all over again for Tesla investors who in 2016 approved Musk's purchasing of Solar City. That was a smallish $2 billion deal that marked the beginning of Tesla's transformation into an EV company, into a producer of battery packs, solar panels, and humanoid robots. Yeah, but I mean, in fairness, the battery packs and solar panels is a great business. In the end, Tesla's diversification may prove to be the smart move as Chinese electric vehicles compete. True, SpaceX doesn't need the diversification, though. It's dominating the market. All the AI companies will be lining up to purchase the special data center satellites that SpaceX builds and a low-cost launch capacity provided by Starship. SpaceX is already seeking approval from the FCC to deploy an orbital data center with up to 1 million satellites. The plan is to position them in the sun-synchronous orbit that would bathe them in sunshine nearly 100% of the time. Right, you sit right on the Terminator zone is where it's called. The Terminator zone is this little belt that always has sunshine in the sky. It's very interesting. Somebody says, as a Tesla shareholder, I'm so happy he's tapping the SpaceX piggy bank instead. I mean, yeah, you're right. You should be. Thank goodness it's not Tesla's free cash flow, huh? That's a good one. A hurdle for big data centers is the cost. SpaceX doesn't need XAI to solve this problem. Tesla would have been a better fit for XAI, says this person. Humanoid Optimus robot won't work well in factories unless it's agile AI. Right. Yeah, well, it's going to be a long shot. It's an interesting point. The guy's got a point. He's got a point. What company should buy AMC? Meet Kevin run for governor should. You know, when I ran for governor, I actually emailed Adam Aaron and I'm like, hey, let me do, because there was a big movement around AMD at the time. I'm like, dude, or AMC at the time. I'm like, dude, let's have AMCs in California be the venue for where we do, governor, rallies. No reply. Like, all right, I get it. Maybe you want to be apolitical, but I thought it was a good idea. I mean, we pay. We don't want it for free. We're like totally willing to pay. Because they weren't really showing anything anyway in 2021. It's a tough time for the movie theaters. I'm like, maybe that'll help them out. Nope. It's all right. No problem. Every no is a little closer to a yes. All right, where are the Qs? Hey, look at that. We're finally above 2% here. What do we buy the dip? Like right over here somewhere? So, we've been watching a little bit of a recovery here. Tesla now only in the 3s, Nvidia's in 3s. Looks like we got a little bit of relaxation here. It's just good. Things are settling down a little bit. Netflix up 1.4. Good. Hopefully things keep relaxing a little bit. Meta stable, Google stable. That's going bankrupt. That's fine. We expect that. Any other deals out there? I mean, look at Hims, $24. Holy schmolies. $5 on Peloton. Coinbase down 7%. It's down at 167. Holy smokes. Look at that decline from the summer. Coinbase, 167 divided by 444. Coinbase is down 62%. Jeez. Ay. What a mess. All right, well, I got some work to do for HouseHack, so... bye-bye. Yeah, I got some work to do. Appreciate y'all being here. Remember, go to meetkevin.com. You can join the Alpha membership. You get that Alpha report every morning before the market opens up. And then, of course, you get the fundamental analysis and the archive of fundamental analysis over at mekevin.com. You want the real estate AI, go to househack.com, get that lifetime access before we switch to a monthly model once the valuation AI comes out. You want to invest in HouseHack, you can do that before Friday at 11:59 p.m. I can finally close that and be done with it. And read the offering circular. There's risk with every investment. Good luck out there. I love you. I bought the dip. I hope you bought the dip too. Goodbye and stay safe.